Good morning, everybody. I'm Frances Button and I shall be chairing this meeting of Hertfordshire County Council's Audit Committee on Thursday, the 15th of October. I have an announcement to make about the COVID-19 arrangements for attendance at this meeting. Due to the coronavirus pandemic, the Council will be holding this meeting electronically in accordance with the relevant regulations. Members of the public may also attend this meeting in an electronic capacity, and there is a link on the Council's website for them to do so. Members of this meeting are asked to keep their microphones and cameras switched off until called to speak, and to switch their microphones and cameras off once they've finished speaking. To indicate a wish to speak, members should request to do so using the meeting's chat function. At the end of the debate on each item of business, there will be a vote. Members should vote using the chat function by indicating for, against, or abstain, and I will declare the result after each vote. Officers are in attendance but will keep their cameras and microphones switched off unless called to speak, and breaks will be incorporated into the meeting as appropriate. I will also try to give the agenda pack page reference as we work through the meeting. There are so many pages, over 450, so hopefully this will help us all to be literally on the same page. And I want to make one other point of clarification. Because this is an audit committee meeting, PPE stands for property, plant and equipment as part of assets. We are so used in the media to seeing PPE as personal protective equipment, but in this meeting, PPE, if any officer uses the phrase or if you see it in the papers, PPE stands for property, plant and equipment. So on that notice, let us move forward to the meeting. Membership changes, I haven't had any notification of any, and apologies, I haven't had any. So I'm going to invite members now to introduce themselves, and I think it's in alphabetical order. So Simon Bloxham.
Simon Bloxham, Letchworth North.
John Graham.
John Graham, County Councillor for Potters Bar East and Vice Chairman of the committee.
John Hale.
John Hale, Coney Heath and Marshswick.
Ian Ray.
Ian Ray, member for Berkhamsted.
Sharon Taylor.
Sharon Taylor, member for Bedwell Division and Labour representative on the Audit Committee.
Tim Williams.
Good morning, everyone. It's Tim Williams here. I'm councillor for the Woodside Stanwood Division in the North Watford area.
William Wyatt-Lowe.
William Wyatt-Lowe, Hemel Hempstead Town.
John Wiley.
Good morning, John Wiley from Bishop Stortford East.
And Paul Zukowski.
Good morning, I'm Paul Zukowski, I'm the County Councillor for Hatfield South.
Thank you all, and welcome to our committee. Now, Chairman's announcements. The actions from the minutes of July the 1st have been circulated by email prior to the meeting. I am going to make a comment on those actions, but perhaps first I'm going to invite members to confirm the minutes of the meeting held on the 1st of July. I think we're all going to vote via chat. Do we have approval of the minutes? I'm waiting for the officers to tell us, but it looks to me as if we have agreement. Thank Thank you. We have agreement. My comment on the minutes relates to 4.5, the corporate governance statement, because we made some recommendations from our previous audit committee, and I think Stephen Pillsworth is going to update us. Stephen.
Thank you, Chair. Good morning, everyone. You will see later on the agenda, we do have the annual accounts item, and included in that report is a copy of the draft accounts, and the accounts include the annual governance statement. Because we've not yet totally concluded the audit and there may be further adjustments, we took the view there to continue to include the draft set of accounts rather than an interim updated set of accounts, knowing that there's likely to be more changes and you would then be receiving a third set of accounts. Unfortunately, what it does mean in that document, the AGS remains the draft version and has not yet included these updates, which on reflection we probably ought to have done. But just to clarify for everyone, the published version of the AGS that goes with the final set of accounts will definitely include these updates you see at 4.5 that were requested at your last meeting. Thank you.
Thank you very much indeed. So let us now move on to item 2, and I'm delighted to welcome to our meeting Suresh Patel and Natalie Clark, our auditors from EY. Item 2 starts the agenda pack, page 17, and I think I'm immediately going to invite Suresh and Natalie. I don't know which one of you would like to present this, and I think we all recognise the difficulty that everybody has had working remotely while you've been doing our accounts. So thank you for working within that constraint. Over to you.
Okay, thank you, Chair, and good morning to members of the committee. I will give you a brief overview and then ask Natalie to just update you on the status of the audit. We'll just summarise some of the key issues that we've identified, and then I will close on the audit fees section of the audit result report. So as the Chair alluded to, I think it's fair to say that the audit of the 1920 accounts has been a challenging experience, both in terms of the impact of having to work remotely for so long now, but also in terms of some of the actual judgments and accounting treatments that are actually in the account in respect to things like valuation of property, plant and equipment, of investment assets, and a new focus on things like going concern. Also probably not helped by some late national pension issues with our friend McLeod rearing its head again. So, but in terms of an overview, we obviously wrote this report a couple of weeks ago, and I would say now that we are substantially complete in terms of the audit, and subject to obviously completing the outstanding procedures that we've listed in the report, I'm pretty hopeful that we will be in a position to conclude on the accounts in the next 2 to 3 weeks. So by the middle of November at the latest, aiming to get that done earlier if we can. And we'll come on to some of those outstanding issues and where we are with those in due course. So whilst it's a bit frustrating that we are probably 2 to 3 weeks behind where we'd ideally like to be, I think in light of the challenges that the remote working and those issues that I've briefly mentioned have presented, I think we're not in a bad position. I think I would also say that despite the challenges of remote working, there's continued to be good cooperation between the audit team and the finance function. We have regular and effective engagement with the teams, and as far as we can, we've been clear both ways in terms of communications of the issues that we've identified. So. And again, just to kind of highlight, I am anticipating issuing an unqualified opinion on both the council's accounts and the pension fund accounts. We'll come on to that shortly. There is reference to an emphasis of matter on going concern, but our view on that has now changed. We're not expecting to issue an emphasis of matter, and there'll be no matters to report on the value for money conclusion. So in terms of the output of the audit, it will once again be a positive position for the council. And just to give you a bit of context, the challenging nature of the audit is what we've found everywhere in terms of local authorities that we are auditing, and our colleagues at other firms are experiencing the same issues. And I'm not aware of many, if any, local authorities having their accounts signed off to date. So most authorities are in the same position as you are in terms of some of these national issues that are impacting upon the ability to close the audit. So let me ask Natalie to take you, just update on the status of the audit page, I think, which is page 25 of the pack.
Yep, thank you very much. So yeah, if you can move on to agenda pack page 25, that sets out the status of the audit within the table. Suresh will give a little bit more detail behind going concern on the next page. If I take you through the other items from left to right. So our top-up expenditure testing has been completed and no matters are arising from that. That's the same for the work on the bad debt provision, which is now concluded. We're expecting the receipt of the IS19 assurance letter today, as we're writing that to ourselves and hoping to get that issued today and the other ones to the rest of the districts. We're concluding on our work in relation to testing of PPE, so property, plant and equipment, as mentioned in this situation, and I acknowledge that this has been an area that's taken a little bit longer than we would have liked during 1920. I guess COVID has impacted significantly on this, as the majority of our audits have had to engage our specialists in this area, and the impact on their capacity has been quite great. So we appreciate the council's frustrations in the finance team in some of this engagement's been going back to April and perhaps before. We're concluding our work in respect of the note 29 expenditure and income analysed by nature mapping. This has resulted in some additional testing following the identification of one error, and this would result in a reclassification within that note between other income and government grants. Testing for unrecorded liabilities is a test that we have to perform up to the opinion date. So this is something that we're continuing to work with the finance team to conclude on as we go through the coming weeks. And a couple of these are then just items that we have to do right at the end of the audit. So receipt of the final set of accounts, following up on any final audit queries and anything coming out from final reviews, updating our procedures in respect of post-balance sheet events, receiving the letter of representation, and the consultation on the audit report just links in with the going concern. Just to give a little bit of detail there on the audit differences, which are just mentioned briefly on the bottom of that page. The detail is set out on page 43 of the pack, but just to give you a bit of an overview, we've got one adjustment in respect of the valuation of care homes, where the decision has been to reverse this year's change to accounting for care homes and depreciated replacement cost back to existing use value. That results in a drop from the draft accounts to what will be the final version of 95 million. There is one further item which isn't reported in this version of our report, which is a reclassification between debtors and creditors of 2.1 million, but I believe this is set out in the officer's report to follow. And then we've just identified a few other amendments that we don't feel the need to bring to the attention of the committee. There's one unadjusted error set out on page 43, which is a judgmental error based on the valuation of land. This is due to a timing difference of the preparation of the accounts and the fact that there's just more information up to date for Q1 of 2020 available now. This isn't an adjustment they would expect the council to amend due to its judgmental nature. Looking on agenda pack to page 26, just to take you through just a very couple of areas of focus of the audit, and just to outline where we've concluded. So management override misstatements due to fraud and error has been completed and no issues have been identified. Also, in relation to incorrect capitalisation of revenue expenditure, we had no issues in the testing that we've undertaken. In respect of the pension liability, as has already been mentioned, we're expecting the IS19 assurance letter today, and then the only other outstanding element is in respect of McLeod, and this is a national issue which we're just working to close down with help from the pension fund and the actuary. I won't touch again on property, plant and equipment. We are concluding our report on this at the moment. We're expecting EY Real Estates to come back to us either today or tomorrow with their final report, and we'll work with the council to close this area of work down as quickly as possible. Our other areas of focus haven't identified anything else. And if I pass on to Suresh just to pick up on going concern.
Yeah, I just wanted to kind of highlight that because obviously it is a kind of new area of focus and one that that both the council and auditors haven't really focused on before. And I know it's included in the paper that officers have prepared later on, where you can see the actual revised disclosure that that has now been prepared. That is something that we are now just waiting for some final information to support that assessment. And I just wanted to reiterate that this was never about challenging whether or not the council is a going concern. It was more about is there an adequate assessment made in terms of impact of COVID on income and expenditure, on reserves, on cash, and is then an associated disclosure appropriately made in the accounts. And from our perspective, the revised disclosure that you've got in the pack later on is a transparent and informative disclosure, which we think would benefit the accounts and telling the story in terms of the council and the impact of COVID. So hopefully we'll be able to conclude on that very shortly. Just two other things I just wanted to highlight then. So moving to page 46 of the pack. We did identify a risk around value for money, where we needed to understand the arrangements that the council had in terms of its plans for making significant investments moving forward. Obviously, we understand that that plan is kind of somewhat sort of stalled in light of COVID, but in light of the arrangements that the council had in place for 1920, you'll see on page 46. We had a number of questions that we were seeking in terms of lines of inquiry, and then over the page on 47 and 48, we've summarised what we found against those questions, and ultimately we were satisfied that the council has appropriate arrangements in place to mitigate the risks associated to that strategy that it had in place for 1920 and obviously moving forward. So whilst in the audit opinion we've got no matters to report, we just highlighted to the committee there the findings, which again hopefully you'll find informative. And then finally, before we go to any questions, I'll move to page 55 of the pack, which talks about audit fees. And there you'll see we've just indicated the areas of additional work that we've been required to carry out for the 1920 audit. Clearly, some of those areas, as we've just alluded to, we've yet to finish. So once we have finished those, we can then discuss with the Director of Resources and provide details in terms of the additional time by grade and by activity in order to support our proposal for additional fee, which I know we'll come to the committee in due course. We'll stop there, Chair, and take questions on the council's audit results report.
Thank you very much indeed. What I've picked up from this, I'm pleased that you're anticipating issuing an unqualified report. Thank you for that. Again, we all know the challenging nature of this. I note that the PPE, the Property, Plant and Equipment report, final report, is due shortly. I do want to ask a question on timing in terms of signing off. You were hoping to have these matters finalised, you said by mid-November. I think from our officers' viewpoint, and this can't be a new question for you, our officers can't keep rewriting the going concern and the ongoing issues because the world is changing so fast up to the deadline. So can you give us a date by which time our officers and you can say, fine, going concern, we're going to do it, we will finish it at that date, so that the last processes that you have to go through can be done?
So I think on going concern, what I would say is, and Natalie can correct me if I'm wrong, but I think your assessment already goes up to the end of. So what the standard requires is an assessment that takes you up to 12 months from the date of the accounts being approved. And I think we've worked on the basis that end of November this year, which means November 21 for the assessment. And I think your assessment already covers that period. So we wouldn't be looking for anything additional in terms of the assessment. I think what you're getting at is whether or not if anything changes between now and say mid-November, would we expect that change to be reflected in the going concern disclosure? And I would say probably not, because I think your going concern statement is clear enough that it is at a point in time. and that point in time, I think, if I'm right, is in that disclosure. So if it says as at the end of September, this is our position, then for as far as we're concerned, that is fine. I wouldn't expect it to be revised the day before we're going to issue the opinion.
I think our officers will find that very reassuring. Thank you very much. And I did want to make a comment on fees as well, because I know members of the Audit Committee are mindful of the conversations we've had about fees at the end. I think I'm simply going to comment that obviously any variation in fees would expect to be associated with an analysis of the additional work. Clearly, it's a national issue. It's being discussed with, I can never remember the initials, PSAA?
That's right.
Right. So we will be supporting the director in challenging the fees, which is in the recommendation. So those are my comments, and I'd be very happy to take questions from colleagues. And I'm having a certain amount of difficulty. Right, John, thank you. A question from John Hale.
Thank you very much, Saressa and Natalie. That was a very useful summary of the main points in the report, and thank you. Just out of interest, to what extent, and bearing in mind that some of the comments in the Redmond review, what's been your interaction with the County Council's internal audit this year, and is that an area that you could be making more use of in the future?
So, yeah, you are right. The Redmond review did pick that up as a potential area to move forward. Our approach has to date been that whilst we don't place direct reliance upon internal audit, we do obviously use their work to inform our view of the council's what we call internal control environments, which then supports our risk assessment. So if internal audit identified significant weaknesses, then that would heighten our kind of risk assessment, and we in effect do more work. Up until now, and I don't think it will change significantly. The reason why we don't place reliance upon internal audit is because the auditing standards, in effect, I wouldn't say prohibit it, but do put in place a number of obstacles in terms of having to reperform internal audit work, and you're not allowed to direct internal audit work. So I think for this year, as I've said, our approach isn't to place reliance upon internal audit. Clearly, we'll take into account the Redmond review recommendations if they get implemented, but I think auditing standards would have to change in order for us to really place direct reliance upon internal audit work.
Thank you. Very interesting.
Thank you. And I've got a question from Tim Williams, and then from Ian Ray, and then somebody else has signed they want a question, but I haven't spotted her hand. Oh, it's Sharon. OK, so I will take Tim and then Sharon and then Ian, because Sharon seems to have done it before Ian. Tim, Sharon, Ian.
Thank you, Francis. Yes. And thank you very much to Suresh and Natalie for their presentation this morning. Yeah, my question, I know basically Suresh and Natalie covered this sort of thing, but it all comes down to sort of the valuation of property, material uncertainty, disclosure as going concern. I appreciate you did go through this and the value for money. I know there's significant risk. You've highlighted that on page 8 regarding the pension liability, the property, plant and equipment. And basically you're highlighting we anticipate an unadjusted difference in respect of land values, where there is a difference of opinion between our view and the land values has seen a decline in value, but the authority's value is saying it's risen sort of thing. I appreciate there's the care homes was a particular case in point of 95 million sort of thing. And basically, yeah, so it's not small change we're talking about here. And it's always difficult to know to ask yourselves this question or our officers. So perhaps the chair could allow a response from one of the officers. I appreciate it does come up in the next item. But yeah, can you just give us a bit more detail, a bit more confidence, a bit more sort of foundation that this will be resolved? Because in one sense, we're having this meeting now, but yes, it's not going to be sorted out until mid-November, really.
I'll try to unpack the question because I think there's quite a lot in it. But yes. I think, and you can correct me if I'm wrong, you're basically talking about the fact that there's a number of estimates in the accounts which involve other parties like valuers or actuaries, and how do we get to a position where collectively we're satisfied that the accounts are appropriately reflecting those valuations. So I think on the valuations of property, plant and equipment, I think that work is actually concluded. I think we're just waiting for a final, what we call a final memo from our internal specialists, and we're satisfied with your response to the issues that we've identified. So we're happy that the adjustments that you're making and the the things that you're not adjusting for. So we've reached, I think we're happy there. On the pension liability and the national issue that we talked about, that is being taken forward as well, and that also should be resolved in the next couple of weeks. But we're not anticipating on that. Actually, I don't think there'll be any actual difference in the accounts themselves. It's more about an assurance that we understand that the accounts don't need to be adjusted for, if that makes sense. So I think, again, I'm pretty confident that will be, both of those areas will be resolved in the next 2 or 3 weeks. I think the bigger question for me, and I think this did come up in the Redmond review, as one of the councillors just mentioned about Redmond review, is the whole focus on valuations and pension liabilities. And at the moment, the code that you follow requires you to account for those in the way that you do. And then the auditing standards require us to audit them in the way that we do at the moment. Until those two things change, we're always going to have a situation where, you've made a big estimate in terms of those valuations, and we're having to then get our own experts in to in effect challenge those valuations. And I think until the code changes from your perspective and the auditing standards change from our perspective, this is going to be an annual, and it has been, hasn't it, for the last few years. It will appear in the report as we go forward.
Stephen Pillsworth, would you like to make a comment as well?
Yeah, thank you, Chair. I mean, just to build on what Suresh was saying, a lot of this is driven by national regulations on the way audits need to be handled now, and the extra focus on PPE and pensions as, in most cases, the two biggest elements of a council's accounts. It does become quite subjective at times around what is the most appropriate approach. So, for example, the adjustment around care homes, it really boils down to what's the value we should have in the accounts. Is it the cost of replacing those care homes because we're going to continue providing those services? Or actually, is it more a market related cost about what might be the value if we sold those? So actually, it boils down to, almost irrespective of what the values are, that subjective discussion, and we do get into that in a number of places where Suresh will say EY will bring in their experts, we've got our own valuers, but it does boil down to that sort of judgment call. I'll be perfectly honest, at this stage of the audit, quite often we will pose the question to EY, which approach means you will sign off the accounts? Because actually, we could end up having that subjective debate almost endlessly. What's the version that will get the accounts signed off? We will go with that, and we will clearly report that to audit committee. So we will, between us, absolutely make sure all of those items are cleared and worked through in the accounts, but there will be some where we follow that approach.
Thank you both. Sharon Taylor.
Thank you, Chair. And thank you, Suresh and Natalie. And who'd be an auditor at the moment? I think you need a crystal ball, not your usual calculators. But thank you for the presentation. My first question is around the going concern aspect that you've outlined in a very detailed way for us. Two bits on that. One is you see a lot of authorities, and I'm interested in how Herts compares with other authorities, and also. We are becoming increasingly concerned about ongoing payment of council tax and business rates because of the ongoing COVID situation, and should we experience a further lockdown, and we are seeing numbers of jobs disappearing. I know that to some extent the county council are insulated from this because poor old districts have to pay over the money for council tax, whether they receive it in or not, to the upper tier authority. But how have you taken account for that, or is this entirely retrospective? So we're only looking at what's happened before. So that's the ones on the going concern. My second questions were on the issues raised on page 46 on the investment, the way that the investment works, and two questions on that. One is how unusual is the way that Herts County Council have set up this investment function? I appreciate, Chair, you don't want to duplicate the work of scrutiny, and rightly so in my view. We shouldn't be doing scrutiny through the audit committee. We have asked the Resources Board that opposition members are represented on the investment board because we don't have any opportunity to look at how that's working. So a question around governance really, and do we need to consider how that investment function is scrutinised, as well as the actual board that decides on the investment profiles and makes the investment decisions. Thank you, Chair.
Yeah.
Okay, thank you for that. I'm going to ask Natalie to come in on the investments question, although I think the second half of that wasn't really a question, was it, Chair? In terms of the governance.
I think your or Natalie's advice on the investment board and the way it's working, that would be helpful.
Okay. So I'll ask Natalie to come on that. So on the two-part questions, ongoing concern, I suppose, can I ask clarification in terms of how do you compare? Do you mean in terms of how you fare in terms of the impact of COVID on income and expenditure and reserves, or do you mean how you've dealt with it in terms of the assessment that you provided to us? Just take a bit of clarification.
I think the latter I was interested in. You see lots of authorities, and it's just helpful to get that perspective on how Herts has managed this great deal of uncertainty. And I'm not, please don't think I'm being critical, because I'm not. I've seen Stephen's work very closely through and the team's work through the Resources Board. I'm just interested in what the different approaches are.
So I would say from the assessment that we have seen, which is documentation to support the impact of COVID in terms of future finances and cash flow, you compare well in terms of that detail. I think you took your time to do that, which is right. But the level of details that supports the assessment we think was appropriate, and the level of challenge that we've provided hasn't had to be as significant as it has been at some other audited bodies that we operate in. So I think that stands you in good stead in terms of understanding the impact as you move forward. So hopefully that answers that first part of the question. The second part, I think you were talking about council tax and business rates. So as you probably know, the way the kind of business rates works is that there's likely to be a bigger impact in next year. 21-22 I think will be a far bigger impact in terms of some of the like you say, the drop off potentially in collection rates, etc. Because it was a factor, and it is a factor in your going concern assessment, but because that goes up to November 21, I think you'll see a bigger impact next year in terms of council tax and business rates.
Stephen, can I just cut in? Stephen, did you specifically want to comment on that point?
Actually, if I may, because I've got just a couple of comments maybe on both points. I'll comment on this first one about going concern, then maybe let Natalie respond on the investment fund, and if I could just add some comments at the end of that. But no, I'm really glad that Sharon raised the question about going concern, because I know later on in the agenda, when we've got the risk register, one of the key risks there is about the financial impact on the council of COVID, not only this year but next year as well. And the work that EY have done around going concern and value for money is a key part of our assurance around that. So yeah, it's an important part of this discussion. Also just to flag for members who are not on the resources and performance panel, the most recent COVID update report that came into that panel included our first forecasts of the financial impact next year, which is where some of these issues around council tax and business rate shortfalls do feed through and do affect the county council, and our plan around integrated planning to respond to that. So some of you will have seen that, but not everyone. So just wanted to flag that as well.
And I apologise, Stephen, I never quite get the title that you have right. Would you just like to remind people coming in from outside your title?
Of course, you're quite right. Sorry, I should have introduced myself at the start. I'm the Assistant Director of Finance here at the County Council.
And I mention that, thank you very much, because the Director of Finance, Scott Crudgington, Scott, have I got your title right? Would also like to make a comment on this, please.
Yeah, it's Director of Resources, Chair, but no worries at all.
wrong. Thank you.
No worries. Yeah, morning, members and colleagues. Just really to pick up the point around the commercial investment fund, and although all the work that EY have done in relation to the governance approach to that work is welcome and gives us that assurance. Just so members are aware that we've actually pulled back in relation to continuing investment through that fund. We've made one purchase through that governance framework that we established down in Waltham Cross last year. Which has been completed and is now in operational. Is now operational from our funds perspective. However, we because of the changes that have come back from Treasury in relation to PWLB borrowing, that we've decided to pause all activity through that fund until we're absolutely clear on the outcome of that consultation. And our ability to be able to future borrow for such activities. So as it stands at the moment, all investment through that fund is currently on pause.
Thank you very much. So we've probably sort of moved forward, Natalie, to you were going to come in and help on the second section of Sharon Taylor's question, which related to the investment board and the governance.
Yeah, absolutely. So just, I guess, to reiterate what Scott said, throughout the audit process, we've sort of become more aware of some of the changes and the halting of the process that's gone on. At the time when we reviewed the arrangements with the investment board that was set up and the members on that, based on the investments that had taken place at the time, that didn't seem unreasonable. Going forwards with any bigger plans in the future, it may be worth revisiting the membership of that group and who perhaps wants to be involved. But I think at the moment, whilst some of those investment activities take a pause, the activities and the minutes that we've been able to have access to and review cover sort of the arrangements as we'd expect to see them.
Thank you very much. And Ian Ray, thank you for being patient. Ian, I think it's your turn now.
Thank you, Chairman. My question relates to the valuation of care homes. I noticed in the report, and it's mentioned again in the next item under item 3 on the response from the council, there's almost a £96 million difference in the valuation of care homes, depending upon whether you look at the replacement cost, as I understand it, or the market value. But I just wonder, to what extent is that the market value determined by the current situation with COVID, for example? Are we giving discounts to care home operators because of the current circumstances? And also, is it possible that if you're looking just at the active market for care homes, that might be too narrow a market? We might, for example, consider that we would want to relocate a care home to another site, and the valuation of that site when we dispose of it might be significantly higher if we want to use it for another purpose. So I wondered if we could have some clarification on the market which you're using to determine the market valuation of the care homes.
Suresh or Natalie, valuation of care homes.
I might ask Natalie to come in a bit more detail if she can, I think. But I think the question actually illustrates the point I think that Stephen Pillsworth is making about some of the subjectivity around this, because you're right in terms of some of those judgments in terms of is it a specific market around care homes, or is it a wider market in terms of depending on what the future plans are around it. I think, but those. And that's why we have to rely upon our own expert to give us a view on that, because clearly we're not valuers, and I would expect them to be informed by their wider experience in terms of what's going on in the market. So Natalie, any more detail you can provide on that?
So in respect to the care homes, they're valued at existing use value, and that takes into an element of income associated with those care homes. As those, that income level is subsidised in a number of cases to those care homes due to the provision of care that you offer across the county. In some respects, the value is lower than perhaps it would be if you were out in the active market. However, the valuers have to use the best information that is available, and that is quite often on rental income. I think there was one point around any discounts that are being offered in respect of rentals, and I have had this conversation with officers alongside the going concern information that's been provided back to us. Have been no current discounts offered. I believe that one provider did seek to have either a holiday or a slight change in their contract arrangements discussed, but that hadn't actually been determined when the information was provided to us. I don't know if any of the officers wanted to comment any further on that.
None of the officers have flashed up. I think you've probably covered very accurately the huge complexity of valuing property anyway, and whether it's rental income, whether there are discounts, the market is changing so quickly, whether it's the property value. I think it was Sharon who said at the beginning, Sharon Taylor, who said at the beginning, who'd be an auditor at the moment. We're delighted that you are, and thank you for looking after us, but it's a moving picture. So, Paul Zhukowski, you have a question.
Thank you, Chair. I think I know the answer to this question, but I'm going to pose it anyway because I'd like the assurance of confirmation. So, reading the section that you pointed us at page 47, Suresh, the financial impact on the budget of the MTFS, including assessments of downside risks associated with falling capital values and increasing borrowing costs. Now, that particular item was related very much to the commercial investments arm, but I think it also applies to the wider capital programme that the council has. And a lot of that is, there is a substantial input into the capital programme from capital receipts as we go forward. There are capital projects that we are committed to, and we've seen the Public Works Loan Board increase the cost of borrowing with virtually no notice. So I wondered what your perspective was on the council's wider exposure to potential increases in borrowing costs going forward, because we have been just talking about the going concern approach. I don't believe that for a moment that it would adversely impact the going concern decision, but I just want to be assured that you have an eye on that exposure and that it is of little to no concern to you.
So I can give a kind of audit perspective on that, but again, officers might want to actually inform you what they're actually doing, because that is part of the going concern assessment, as you rightly say, because obviously there's implications in terms of if you're going to have to, if you've got a need to borrow, and like as you say, because of PWLB now being more expensive than it was, you might seek alternative forms of borrowing. From my recollection of the assessment, I think we were satisfied that was an appropriate assessment, that you had considered the potential implications on that for the going concern period that we're looking at the moment. But I think I'm sure officers can explain actually what they actually do, because I know they do a lot of work to forward look in terms of potential need for borrowing and where those sources of borrowing will come from.
Yeah, it wasn't so much the borrowing, it's the liabilities in terms of revenue going forward that you take on in terms of servicing that borrowing that was perhaps the concern. So I now assume that you'll have looked at that and taken a view, and that certainly I'm certain to be assured by officers that they've taken that into account. But it's getting your independent perspective on it as well that I was particularly after. That was all.
So we have done that as part of the going concern assessment. Yes.
And I'm going to invite Stephen Pillsworth to comment because I'm not convinced we've got a large exposure to the PWLB.
What I was just going to flag, of course, we do, as part of the integrated plan, our medium-term financial strategy. That is a 4-year plan, and it includes a 4-year capital programme. We did earlier this year, when we published that, draw attention to the fact that that 4-year programme did outline a rise in borrowing and higher levels of borrowing than previous years. And whilst we have included our best forecast of the cost of that borrowing in our revenue forecast for that 4-year period, in many respects, Paul is right. If interest rates were to rise, then clearly that increases the cost of that borrowing, and we would need to respond to that accordingly in our IP and MTFS proposition. We do include in the IP, in our risk analysis, what would be the impact on our revenue costs of changes in the level of interest rates. So we've got that there. We do, in terms of the rates we actually include long-term PWLB borrowing rates, which actually have remained remarkably stable throughout the period. It's more of the short-term rates that have had a significant level of fluctuation. And the last thing I just flag, again, Paul is right that I think it was only around about a year ago that there was announced an immediate increase in the PWLB rates. Some of that was, and government were quite open about this, off the back of the levels of commercial investment being undertaken, which drove then the consultation into the use of the Public Works Loan Board money that Scott referred to earlier. In that consultation, it does state that the government's plan is, once they bring out final proposals and bring in changes to PWLB, they do have the intention of taking that increase back off. So we should, if anything, see a reduction in the borrowing costs of PWLB at the moment. But it's definitely an issue we in the council are continuing to monitor very closely as we refresh IP and move forward with that capital programme.
That's very helpful. And I don't have a note of anybody else who wants to ask a question. So I think in that case, extremely grateful to Natalie and Suresh from EY, and I'm going to move to the recommendations. And this is, if I say just on item 2, occasionally we've had officers coming in, and obviously they'll be saying more on item 3. So I just refer to the recommendations on item 2, which is that the committee notes the draft audit report and notes that there's still some audit work that remains to be completed, and that we have had our verbal update. So are we all happy with that? Could you please vote? So we're just waiting for officers to confirm that that has been agreed. It looks as if it has. Thank you, majority agreed. So thank you very much for that. And we now move on to item 3, which is the audit results update report from our officers responding to the report we've just had in item 2. So that now takes us to agenda pack page 67. And I'm going to invite now Scott Walker. I think, Scott, you're going to do the presentation on this one.
Yes, thank you, Chair. Good morning, councillors. Yes, I'll pick up agenda item 3. I'll try not to reiterate a lot of conversation that's already been had following the EY report. But in general, I think just to follow on from Suresh and Natalie's update, the audit obviously is not complete as of yet, but we are quite confident in the next 2 or 3 weeks that we can complete the audit way before the statutory deadline of the 30th of November. This year's audit has been a challenging audit due to COVID and the impact of the pandemic, and also the additional work that obviously needed to be done on going concern, and also around valuations and the uncertainty that were in the marketplace. I would say we have worked well with the auditors on these areas, and a lot of the additional work is sort of driven by national standards, statutory requirements. So it is definitely an area that we've worked together to try and work past and to get to a signed account. In terms of the work that's left, I think the report from EY and ourselves do clearly show where the audit adjustments are that we're aware of to date that need to be posted. I think the key one we've already talked about around care homes revaluations is the only one with a significant value that we will be adjusting accounts for. There's a number of textual and smaller notes that we will be changing, but this is the most significant audit adjustment that we'll go through. As stated, this is a difference of opinion of technical experts, so yeah, it is not affecting the bottom line of the council. It is a reflection of the cost of the care homes, which has a subjective element to it. There is an unadjusted error on the report which relates to land valuations. As you can see from the report, that's only a 0.65% change in assumptions by experts again, which then had around a £4 million difference in the value of land. We've agreed with the auditors not to adjust on this basis. Not in the report, just recently, as Natalie mentioned, there was a £20,000 error found recently, which we are looking at and may result in another unadjusted error to the accounts. But this is unlikely to be a material amount, and I think we'll be in agreement that no adjustment would be posted for this either. This was a simple misclassification of income between grant money and sales fees and charges, and again wouldn't affect the bottom line. In terms of the outstanding work, we are still just finalising the going concern and doing a bit more work around the sensitivity analysis, which as members have already highlighted around, in particular, council tax and business rates and how that could impact on future years. So that work is just continuing, and a finalisation of the extra disclosures within the accounts. We will also update the narrative report at the start of the accounts to reflect the latest position on COVID, because that narrative report was written a few months ago, and clearly it's changed a number of times in the every month or every announcement from government. In the report, you will see the adjustments that we have agreed with the auditors in Appendix 1. And as Appendix 2, we've attached the draft accounts, which does not reflect any of these adjustments, as we will put them all through before they are approved and signed.
Scott, I'm just going to leap in. When you refer to Appendix 1 and Appendix 2, shall we just try and give the page reference numbers for the pack so that people can follow us? Oh, I found Appendix 2 is page 79, so Appendix 1 must be before then.
Yes.
Okay, so Appendix 2 is 79, and that's the statement of accounts.
Yeah.
Sorry to interrupt. Do keep going.
And then Appendix 3 is our example of the disclosure note, which we intend to include on going concern. We're just finalising that disclosure note with EY at the moment as well, to be put into the accounts. So I think they are the key issues which officers have obviously been working with the auditors. But in general, I think the audit has gone as smooth as it could have been during the pandemic and what's been going on. In terms of the recommendations, we have asked just for the committee to note the progress of the activity of the audit, and also that we are confident to complete the audit by the statutory deadline. Also, there's recommendations in there just to say for the committee to review the audit adjustments that have been agreed with EY that will be replicated into the accounts. And then we've also put into around delegation of responsibility to sign the accounts and the letter of representation from the chair and Director of Resources, the Chief Finance Officer. After a request from the chair, we will circulate all of the finalised reports for members to have sight in advance of the signing of the accounts to aid governance and to people to challenge anything that they wish before the accounts are signed. And we will, of course, come back to committee with the final versions of the audit results report and the final set of accounts that have been signed. The final element of the recommendation is just around audit fees, which we will asking for support for the Director of Resources to challenge any fees that we see as being excessive. Clearly, there is an increase on the scale fee related to the COVID additional work, and as Suresh has mentioned earlier, they will provide supported evidence for any increase in the fee. So it's just a recommendation there for us to go back and challenge any fee uplifts with the auditors. And if required, that will be passed on to PSSA for a final judgment. Happy to take any questions on the report. I try not to repeat anything from previous item.
Can I just ask you a question, Scott? Included within this report, we've also got towards the end, so page 211 onwards, we've got the local government pension fund account. We've got from 244 onwards the firefighters pension fund, and 261 the annual governance statement. Did you want to do those separately, or do you just want to make a quick comment on those, or are you happy that they've been covered in your introduction so far?
The pension fund will be cleared with its own agenda items 4 and 5. The annual governance statement, is part of the HCC accounts. So yes, no, happy to take questions on that. That would be part of HCC accounts.
Okay, lovely. Thank you very much. So in terms of questions, I think John Graham. John, would you like a question?
Yes, Chairman, thank you. Could I just ask Scott, I'm interested in the McLeod situation with regards to the potential liability. Clearly, the liability of McLeod is potentially a pension liability, but maybe it's just a point of clarification rather than a question. Can I just clarify that the provision for McLeod then is sitting in the Hertfordshire accounts rather than the pension fund accounts? And could you just perhaps just explain as McLeod moves forward, because it looks as though it talks about it being a contingent liability, but then there is something that says the actuary has done a valuation on it. Perhaps you could just talk us through briefly how McLeod might unfold in the relationship between the two accounts.
The liability sits with the employers. So in our IS 19 report produced from the pension fund, we will reflect overall assets and liabilities that are our proportion of them in our accounts. The issue with the McLeod and Goodwin judgments is that further evidence came out after the end of the financial year, which sort of clarified basically other people's opinions on how it should be accounted for. I think that judgment, EY's technical officers have challenged the approach taken by our actuary, and I think the position they came to is that we've been over prudent on the liability, which they've looked at rerunning our IS 19 report for each of the employers to see whether or not there is a material movement in what we should be showing in our accounts. So currently in the draft accounts, I think the view is that actually the liability is slightly too high. And I think the judgment is it's unlikely to be a material difference, and therefore there won't be a restatement of any of the pension fund, but we're just awaiting that rerun of the IS 19 report following a change in assumptions applied by the actuary.
Okay, thank you very much indeed.
Thank you. I've got a couple of comments I wanted to make. Going right to the end, and then I'm going to bring you back to the beginning again. Right to the end on page 272 in the governance report, there was quite a nice reference on the annual governance statement 10.1 with our proposed action. And I mention it here because it pretty much endorses and gives this audit committee just a wee bit more support in terms of trying to ensure that the service committees do follow up promptly their medium-term recommendations. So it simply says that we will continue to strengthen the arrangements in place for ensuring that key internal audit outcomes are communicated to and supported by the County Council's Strategic Management Board and Cabinet members. And it goes on to say it endorses the committee's right to call officers to the committee to account for I think we need to change the grammar here, around the implementation of recommendations and further enhance the council's control environment. So it's quite nice that that's in there. We're obviously going to have in there as well something on the enormous environmental initiatives that the County Council is embedding in everything it does. I'm now going to go back to what I think is quite key, and that's page 78 of this report. And it's the going concern disclosures. Now, I know, Suresh and Natalie, you very kindly talked to us about your views on our going concern, how the officers have ensured that their document takes us forward a good 12 months, and that was very reassuring. But it's that going concern document which is pretty much highlighting the pressures Hertfordshire County Council is under from the whole COVID pressure. That's all I wanted to say, but if anybody else wanted to ask a question, they'd be welcome. I think it probably takes too long to find page 78, doesn't it? Maybe we've covered page 78. I should have known I'd stir somebody up. Tim, that looks like you.
That's right, Francis. As you know, it's one of my favourite subjects, this one. I wouldn't say favourite because, of course, it's not good news. But yes, I was also going to raise a question or comment regarding page 71, paragraph 5.7. That's actually in the agenda sort of paragraph where they're talking about the going concern. And then I was going to raise a question on page 88 of the agenda pack. It's basically the graph there, of course, highlighting the gap that needs to be, the savings need to be identified because of the gap that's forever increasing because of pressures under government funding and pressures under COVID has added to it. And of course, it all comes down to the spending review, which of course for this year, exceptional year, has been sort of, moved on so that government can find some solutions for it. But it echoes what you're highlighting, the going concern value for money comment.
I don't know whether any officers want to make a comment on that. Scott? I say Scott because I can see you on the screen. If you'd muted your video, I wouldn't have called you.
Wasn't quick enough. On the narrative report you referred to on the graph, that is the IP position that was approved in February. So that was actually the pre-COVID position. But as Stephen has mentioned earlier, the IP process is heavily ongoing at the moment, which is involving a lot of departmental work, a lot of sensitivity analysis around collection fund. As you say, there's been a delay in government funding announcements. There's a lot of uncertainty currently. So the organisation is working through a lot of potential ways of reducing the budget and narrowing the gap to make it as manageable as possible. But as you say, there's a lot of uncertainty currently, and I don't think we'll have a lot of answers until probably later in the calendar year when we start to get government announcements on funding and we get to get more information coming through from our districts and boroughs on the collection fund and exactly what the funding position is for the council. We will update the narrative report to reflect the latest position for the final set of accounts, which will help highlight that. I'm not sure if I exactly answered the question, but there is a significant amount of work currently going on to look at the budget gap in future years.
Thank you, Scott, for that. I wouldn't mind just coming back, probably more of a question to yourself, Francis. But no, it is appreciated, Francis. You have noticed that generally when we do amendments before the accounts are signed off, that the members of the committee do actually get sort of sight of them beforehand. Scott did mention it, so thank you for highlighting it to Scott.
I think it's really important. We are an audit committee and our task is to ensure that the governance of the county council, that we're satisfied with that governance. And to me, it's entirely right that everybody, all members of the committee, should be fully informed what's going on. So thank you for that. So yes, if that moves us nicely to the recommendation, which Scott has taken us through. So I'm going to ask you to vote them on exactly as they are, other than one question, and that relates to 3(6). As Scott said, not bringing back the changes to the next meeting of the committee, but to be circulated prior to signing. And I'm assuming, Scott, there'll be something along the lines of, if you don't reply within 24 hours, then we'll go ahead, because at that stage we won't have another week to play with it. So it'll be along those lines, but I do think people need to be notified and consulted. So on that basis, member vote, please. Those in favour of the recommendations as just amended. I'm hopeful that's a majority. I'm just waiting to hear that that's unanimous. Lovely. Thank you very much indeed. That is unanimous. And oh joy, we can go straight on to page 283. Isn't it lovely to turn the pages that quickly? So item 4 is on page 283 of the pack. And it's the Pension Fund Audit Results Report. So I'm going to turn back to Suresh Patel. And also Natalie Clark, but I see, Suresh, your name is against this one, to introduce this.
Thank you, Chair. I can't escape, unfortunately. So just briefly on this one then, because again, some of the commentary that we gave on the Council's Audit Results Report clearly apply in respect of the challenging nature of the audit. I think in terms of how that's reflected in the pension fund is more around the volatility in the markets that impacts then the investment valuations. And you will see in the report that actually as a result of that volatility, you actually reclassified your pooled property investments from what we call level 2 investments, where there is some kind of market data that you can place reliance upon, to level 3 investments, where it's more then about making a judgment on those valuations. So that was quite a big change in terms of the classification. And actually then the impact on the audit was because we associate a higher risk to level 3 investments, we had to do a lot more work on those pooled property investments, which we have done now, and we're satisfied with what's in the accounts. But that was a change to what we had in our original plan. On the status of the audit on page 290, just to update you, as Natalie referred to earlier, we are now reporting back to the auditors of the district councils in terms of the IAS 19 work, and that includes the outcome of the testing of membership data. There's reference there to testing a sample of 200 fund members. That was all about the triennial valuation, because in order to support the triennial valuations, we have to report back to those bodies and about the quality of the data that in fact that inform the actuaries' work on that, and we have now concluded that, and that has been reported as we speak. We are still awaiting a going concern. I think we got it last night, a going concern disclosure on the pension fund. Whilst the pension fund, there's clearly a different sort of aspect to going concern, we still need to see that assessment, and I think there will be a disclosure, a very brief disclosure in the accounts. So I'm not anticipating any great issues with that. You'll notice reference to audit differences, and again that probably is a reflection of the impact of COVID on the market volatility, and that's more about the timing of the information that obviously we've got when we did the audit, as opposed to you had when you prepared your accounts. And there is a difference there, it's not significant enough to impact upon the audit report. So we're happy with management's view that it's not material to adjust the accounts for those differences. The only other thing I just wanted to highlight was on the fees again, but just to reflect that those areas of additional work, the triennial work, the impact of the COVID on the level 3 investments has required significant additional work, which again we've put a range in at the moment, but we will be providing the detail to support that to the Director of Resources in order to inform his view on those fees. I'll stop there, Chair, and we're happy to take any questions.
Thank you. I'm anticipating that discussion on the fees will be wrapped up in the substantial discussion on fees on the other matters as well. Mm-hmm. So the only comment I would have is that again, what I'm sure our officers wouldn't want is questions coming in very late on outstanding matters. So things like going concern, again, you indicated on the previous item on the accounts that our going concern papers are, you're pretty much satisfied with them because they go at least 12 months ahead, and not quite the same with the pension fund, but I'm hopeful that you're expecting that these will be finalised very quickly, because of course they have a knock-on impact on all of our districts and boroughs. We have to pass through the final situation to them as well. So a quick signing off.
So just to clarify, so the going concern assessment on the pension fund doesn't impact on the assurances that were given to the district councils. So that assurance is going out today on the IAS 19.
Okay.
So the going concern doesn't really affect that.
Okay. And John Hale, I've just picked up your question.
And my apologies to rest. This is probably one that is impossible to answer. But obviously, with the pension fund, you've got both the fund that relates to the Herts County Council employees, and then all the other councils and bodies. And obviously, the going concern basis of the pension fund, to a certain extent, will depend on those other bodies being in a position to continue funding their liabilities. Hopefully, there is sufficient number of bodies, none of which is significant to the fund in its own, that is not a cause for concern. But how is that issue being addressed?
So I can answer that from an audit perspective again, and again, officers might want to come in. That is one of the aspects that we look at in terms of the going concern assessment for a pension fund. As you say, worst case scenario is you have some of your admitted bodies coming to you and say, actually, we can't pay over the contributions that are due from us. And then clearly that would then need to be something that the pension fund would need to factor into its going concern assessment and its cash flow forecast, for etc. I'm not aware, and again, officer, correct me if I'm wrong, that you've had that situation, that you're expecting any kind of default or any kind of delay in terms of receiving those contributions. But clearly, yes, if you were to, then that would be a factor we would take into account.
And Stephen, did you want to make a comment here?
Yes, I mean, if I could just add to what Suresh was saying, of course, the pension fund and the position with regard to individual employers within that fund is monitored quite closely by pension committee. At overall fund level, and indeed for those individual employers, we have the formal 3-yearly valuation, the most recent of which was concluded earlier this year. So as is included within the accounts, at that stage, the overall fund was at 98%, i.e. We had sufficient assets to meet 98% of the forecast liabilities. And each employer would have had a similar assessment to see where they stand as an individual employer and what position that might present for them. We do also, as part of monitoring the pension fund, undertake some specific risk monitoring of employers. And again, that report goes into pension committee around those who might have particular issues. For example, if they've got a declining number of employees in the pension fund, because at the point at which you actually have none in, then you have an issue with potentially meeting liabilities at that point. So they do get monitored, and actually the number of organisations in that position who we flag as being potentially riskier is a very, very small proportion of the overall fund. Maybe just one final quick comment. We did wonder whether the COVID situation and the impact on some employers, because we do have a range not only of councils and public sector bodies, but some private sector organisations who provide services, whether they in turn might have cash flow issues, might have difficulty paying their contributions. And indeed, pension committee discussed and agreed a policy for approaching that. Early on in COVID, we had an approach from one organisation flagging they may have issues, and we entered discussions, but ultimately they didn't need to take advantage or request we use that policy. So that's the positions we stand, both in terms of the long term through the valuation, but also the more immediate issues around COVID and impact that might have had on employers.
Thank you for that. And Matthew Nendink, did you want to make a contribution as well on that?
Stephen's actually said everything that I was going to mention, so that's okay. Thank you.
Okay, good, fine. Well, look, in that case, if we moved straight to those recommendations, we note the audit reports and that the audit is substantially complete with a verbal update provided at the meeting. Well, we've had that, haven't we? So please, could you vote? Lovely, thank you. Unanimously agreed. Thank you all for that. And then that takes us on to agenda item 5, which starts in the pack at pack page number 321. So we'll just have a minute while people turn a few more pages or scroll down a few more. So yes, modern parlance is scroll down a few more pages, isn't it? So this is our response to the audit results report for the pension fund. And I think Matthew Nendink, I'm sorry, I keep putting too many N's in there. Nendink, sorry. Matthew's going to introduce this for us.
Thank you, Chair. So, yeah, good morning, everyone. It's been mentioned already that obviously this has been a a challenging year end, but I'm pleased to report that EY expect to issue an unqualified opinion, and we expect the accounts and the letter of representation to be signed off in due course. I'm very pleased with the way that the pensions team has worked with EY to get us to this point. It's been touched on by Suresh already, so you'll note that we have 3 audit differences in relation to level 3 assets that we decided not to adjust for. Level 3 assets, by their nature, are illiquid and therefore difficult to value as they are not traded frequently. So they're things like private equity investments and pooled property. And because of the length of time it takes to receive valuations from our fund managers, every year the values we include in the accounts for these assets are as at 31st of December. The auditors then compare the March position, which we received sometime kind of July time, and assess whether there's been a material movement. It was a large movement this year, obviously, because of the fall in asset values due to COVID. But because it was below the materiality threshold, therefore we have decided not to adjust. Page 303 of the agenda pack sets out the adjusted differences too. So one of these relates to the pension contributions, and this was a miscoding we picked up before the audit started, where for 2 employers in the fund, their employer and employee contributions were coded the wrong way round for 1 month. We flagged this to EY before they started the audit work and gave them a revised disclosure note. We've obviously had previous mention to the going concern and post-balance sheet disclosures. We've, as Suresh mentioned, we've now provided these to EY for final review, and references to these will be removed from the final audit results report. So there's a recommendation to note the response to the audit results report, and to agree that the final signing of the accounts is delegated to the Director of Resources and the Chair of the committee. Thank you.
Thank you very much. And I haven't seen any questions on that, so I'm going to suggest we go straight to a vote on that one as well, please. So please vote. Lovely, thank you. I think that one is unanimous, and that takes us on to item 6. And I'm just going to ask, I'm always delighted when we have EY with us. Natalie and Suresh, will you be staying for this item as well? Or, I mean, I hope so. As far as I'm concerned, it's a finance item.
We will, Chair.
Excellent, good. So let's move on to item 6, which is page 323. And Matthew Nendick again, please, Matthew.
Thank you, Chair. So this is the end of year Treasury Management Report for 1920. Members would have received the mid-year report all the way back in December of last year, but due to the impact of COVID on the timetabling of meetings, we're bringing the end of year position to this meeting. If it's okay, Chair, I won't talk through the entire paper, however, I'll draw out some of the main headlines. Firstly, the Council has been compliant with the prudential and treasury management indicators, and these are set out in Appendix A. Total interest earned from Treasury investments during the year was £2.373 million, which was an overachievement of income by £466,000. And this was mainly due to higher than expected average investment balances. We continue to operate a diverse investment portfolio throughout the year using a range of money market funds, call accounts, and also investments held with other local authorities. We continue to hold our strategic pooled fund investments, where we've got 30 million invested across 6 funds. These give us a strong dividend yield of between 4 and 5% and are the main sources of investment income for the council. For comparison, our daily money market funds have a return between 0.22% and 0.79% during the year. The capital values of these pooled funds does fluctuate, with the valuation at 31st of March being 3.3 million lower than the previous year. And this is due to the nature of the underlying assets. So they're invested in things like bonds, equities, and property. However, as we've kind of previously reported, these are long-term investments, and we're content to continue to hold these for the long term. And more detailed information can be found in section 7 of this report. In terms of the economics, you can see in section 5 what's happened to base rate during 1920, which fell from 0.75% to 0.25%, and then following that to a record low of 0.1%. There remains some uncertainty throughout the year with regards to the UK's future relationship with the EU. But obviously what dominated headlines at the end of March was the COVID-19 pandemic. As a result of the impact of COVID-19, the council has decided to redeem our holdings in money market funds and place the cash with the UK government as a safe haven. We did this mainly to ensure that the council had easy access to cash. We can see the Arling Close forecast here as well, base rate for the years, and they're forecasting that it will be held at 0.1%. However, we wouldn't be surprised if we saw a further cut to base rate or perhaps negative rates as the government tries to stimulate the economy. In terms of borrowing, we haven't needed to undertake any new long-term borrowing during the year, and we've repaid £2.7 million of long-term loans. One thing to note on long-term borrowing, and Paul mentioned this earlier, is that in October last year, the government unexpectedly announced an increase to the cost of borrowing from the PWB, where they added a 1% to the margin in place at the time. And they did this due to concerns about the overall level of local authority borrowing across the country for property-related investments. So, as we heard earlier, this has suddenly made long-term borrowing relatively expensive. However, the government is expected to reduce this margin following a consultation they launched in March earlier this year. But it will be contingent on local authorities not borrowing purely for debt for yield activity. Thank you. That's everything I was going to cover, so I'm happy to take any questions.
So I'm looking at the chat and I haven't seen any questions being flagged up. So if there are, question, I'm not sure who that question is from. Oh, Ian Ray has asked a question, please. So we'll start with Ian. Ian Ray.
Yes, thank you. I was getting my mute on. My question is around, on page 325, you talk about Arling Close saying that they're forecasting interest rates to stay the same, but there is a risk that they might go lower or even negative. I've read in the press that the Bank of England is giving serious thought and consultation on possibility of negative interest rates, which might be something of a game changer in the way we do things. My question is, have you done any planning or scenario, looking at different scenarios, if we did have negative interest rates, what impact that would have on our treasury management?
Thank you. Nothing particular on the impact of negative rates, but we have modelled, based on that base rate staying at 10 basis points, we've modelled that into the future, and obviously that has a direct impact on returns that we'll be getting from money market funds principally, but also just general impact on bank deposits and impacting on the pooled fund investments. So we will be seeing reduction in income this year as a result of that, and we're going through the budget setting process at the moment, but nothing particular in terms of negative rate territory yet.
And I've seen that, sorry, after Tim, I've seen that Sharon wants the word, but Stephen Pillsworth, did you want to come in immediately on this very point?
If I could please, just
Yes,
very quickly, Matthew's right that we've done some of the modelling about the impact. It's probably worth just flagging that in one area it has already happened. So within the government's debt management facility, where, as Matthew says, that's where we put some money because you can immediately access it. In recent weeks, those rates have gone negative. So there was one weekend where we were actually paying the government to hold our money. So in those cases, we have pulled the money back out of those and returned them to money market funds where we are getting a return, albeit a much lower one. But we're keeping a very close eye on that to see, is that just a short-term blip or does that continue into the future? In which case some of those items and modelling that Matthew mentions will come to the fore. But just wanted to share that with committee. And also just to flag, obviously this is the review of all of last year's Treasury management activity, which is a bit later coming to you than we normally would do because of meetings we've had cancelled. Actually, at your next meeting in early December, we'll have the mid-year update, which will provide a lot more background and detail on all of those issues that have been happening in recent months. So you will get that very shortly.
OK, thank you very much. So Tim Williams, please, and then Sharon Taylor after Tim.
Thank you, Matthew, for that report, and thank you very much, Stephen, for that clarification. Yes, it is regarding last year sort of thing, but of course, naturally, we're all asking about this year and the impacts. Yeah, I understand that probably this year there could be a negative, I wouldn't say negative, from what's been budgeted to be as an income this year, we could end up with about £750,000 short. I just wondered, is that correct sort of thing, and how will that be budgeted? Though I can imagine that's a resource and performance cabinet panel decision there in the cabinet position. But yes, it's another sort of impact of COVID affecting the council's finances.
Yeah.
A comment. I think the answer was yes. Fine.
Okay. And just very quickly, if I can add, in terms of where that shortfall is currently being reported, again, you're entirely right, Councillor Williams. Those who were on resources and performance panel will see the update reports we've brought through on the financial impact of COVID. One of the items we are flagging in there is the impact on our investment income and the shortfall there. So that feeds through to that. You might similarly be aware that we have recently put a claim into government for lost income. We haven't put a claim in for lost investment income because it looks like that is one area where they're saying they won't cover that. It's more around sales fees and charges for services. So it feeds through and we're factoring it into that position for this year. And also we're looking ahead to next year as to what we think the position might be and seeing whether we need to make any adjustments through the integrated plan for our forecast level of income from those investments.
Thank you. So Sharon Taylor. Sharon.
Thank you, Chair. I was actually going to ask the exact same question that Ian Ray had asked, and I didn't get my hand down quickly enough, but I'm glad I didn't now because I wanted to, on the point that Stephen's just made, I think we need to, those of us, I'm not on the LGA Resources Board, the loss of investment income to authorities is really critical, and with the other sources of income that we're facing losses, whether that's council tax and business rates or the other income that we may lose, commercial income and so on. I think the potential for this all adding up to be really material in terms of next year's accounting is really key. So I'm pleased to hear Stephen say that some work's being done on this, because I do think a negative interest rate could have a very significant impact on the already significant gap in funding we've got. So thank you for the chance to give my comment, even if Ian beat me to the post for the question.
And I'm actually going to invite, I've seen, Stephen, that you wanted to comment. I suspect Paul Zukowski could be on the same topic. Stephen, do you want to pick up both after Stephen has asked his question? Stephen, sorry, Paul Zukowski.
I did wonder who you were talking to there, Francis. Thank you very much, Chair. The question I wanted to ask, I've given Matthew a heads up on that this is coming his way, was actually about the table in 8.5, table 4, the Icelandic bank deposits and the return that we've had on them, because of course they were not just lost investment income, but we lost capital as well in those transactions. At the minute, the table seems to suggest that we've recovered 26.7 million of the 28 million pounds we had invested. I wondered if you'd like to just comment on the chances of either the heritable investment or the KSF, particularly the KSF investment, continuing to be recovered going into the future, because obviously there's £1 million potentially outstanding there, and it'd be quite useful to be able to recover some of it.
Well, having invited Stephen to wait, maybe Matthew, you first, and then Stephen.
Yeah, thank you, Paul. So for heritable, we actually received a 16th and final dividend of 95,000. Received that in August of this year. Therefore, we expect total recovery to be 99.33 pence in the pound. And so we don't really anticipate anything more from heritable.
So is that different from what's in the table? Because what's in the table suggests it's 98%.
Yes, so that's a change from the position reported in the table. We did have the administrators told us last year what they thought was going to be the final distribution for the 15th dividend, but they've subsequently revised that. In terms of KSF, the latest administrator report suggests that we might receive an additional distribution to bring us to 87 pence in the pound recovery. But that, I think it's very unlikely we'll receive any more distributions.
Okay, thank you very much.
Thank you. And Stephen, I'm so sorry. I rather assumed Paul would be following on from Sharon. Stephen, did you want to come back in and make a comment?
There wasn't too much more I wanted to say on this, other than just to flag, particularly on the Icelandic banks, the impact in terms of the loss was factored in and dealt with quite some time ago. Actually, if anything, we get a very small increase in income if any new dividends are announced. I'm hoping at some stage, bearing in mind this was something that happened a bit back in 2008, at some stage this will all close down and we'll stop including it in this report and making the report even longer than it currently is.
Absolutely. But I've added on the extra 95,000 and I can see the recovered is just gently creeping up towards the total amount, which is good. So I think we are now ready to vote on this, which is item, let me just check, make sure I know where we are. Item 6, the Treasury Management Service and the Prudential Indicators. Could we vote, please? Thank you. That's unanimously agreed, and that takes us on. That takes us on to page 345, agenda item number 7. But before we do, Suresh Patel and Natalie Clark, you're most welcome to stay online. I think Natalie might already have gone. Suresh, if she has, would you thank her very much indeed for everything that you and she and your colleagues have done? And thank you for helping us through this. And we look forward to, well, hearing about the finalised position as soon as possible so that the problems that I think every council is experiencing and we are experiencing and every auditor is experiencing can for last year be signed off. Thanks.
Thank you, Chair. And I'll pass that message on to Natalie. Thank you.
Thank you very much. Okay. Right. So item 7, anti-fraud report. Nick Jennings is going to take us through this, and Sharon Taylor, you were on resources with me some 10 days ago, and you raised the real importance of fraud, which is theft. It was interesting on OWL last night. We all had a little note coming up to say that OWL is encouraging people and setting out ways of, unfortunately, reporting where they are aware that people are fraudulently making claims against the funding that has been made available through this COVID situation. In terms of this particular report, I did want, as ever, to thank Nick Jennings and just make sure that everybody has spotted that Nick and his colleague, I've lost my page reference, which is somewhere here. Nick and his colleagues were winners of the Outstanding Partnership Award at the Tracking Economic Crime Awards arrangement. It's the first time they've met then, and Nick to win is to come forward to the final. To be shortlisted is good. To win is pretty impressive. So Nick, thank you for all you do. So Sharon, even though I've named you, I'm actually going to invite Nick to introduce the report first, if that's okay.
Okay, thank you very much, Chair, and thank you for the mention about the report and the award. As always, it's always the head of assurance that ensures that we mention our awards when we win them, and we're very, very pleased with that award last year. Good morning, good afternoon now, Chair and members. I'm Nick Jennings. I work for the Shared Anti-Fraud Service. This is a shared service that the County Council is the host of, and the service was founded back in 2015, and we provide a counter-fraud function for this council and 6 others across Hertfordshire and Bedfordshire. So my report covers all of the counter-fraud activity at Hertfordshire County Council in 2019-2020, and I can also provide members with a brief update because I know there's a lot of interest at the moment around COVID and the fraud response to what's happening around COVID as well. So I'm happy to update members on that verbally afterwards if that would help. But for any new members, just a quick insight into SAFs. As I mentioned already, we provide a variety of functions for the council, from helping to develop policies and processes to deter fraud, fraud awareness training for staff, considering established and emerging new fraud risks that we see and the impact they have on the council, both financial impact, reputational impact, and also impact on service delivery. We also use data and data analytics to prevent and identify fraud, and we are also involved with our partners in the comms teams, looking at public and internal communications to help us prevent and deter fraud as well. And finally, we provide an investigation function, the investigation of alleged fraud, prosecution of fraud where it's proved, where our other defences have failed us. So hopefully that gives the members an idea of our role. We also help to design an anti-fraud plan for the council each year, and that ensures that the council acknowledges and understands the risk of fraud that it faces and has in place the appropriate resources to mitigate and manage those risks as much as we possibly can. So if I can just briefly provide a quick update on what's going on with COVID at the moment. It is covered in the main body of the report, so I'm not going to talk about this at length, but again, COVID has impacted on our service and the ability for us to provide a service to all of our partners. The plan that we had in place for this year, we've had to flex that a little bit, and we have discussed that with senior officers, and we've been before this committee as well earlier this year to talk about that. So we are still very restricted in some areas of our work, in particular face-to-face meetings, interviews, and training that we would normally deliver. That had all been suspended until recently. We were just starting to move into a little bit of a recovery phase, which would enable us to do some more face-to-face interviews. We are using Teams, Zoom, and other ways to communicate with people electronically, but sometimes we are required to conduct face-to-face interviews. We're just starting to do that again at the moment, and we're hoping that any decisions made by the government around lockdown won't impact on that significantly. And we can get back to more business as usual face-to-face work that we enjoy doing. But we have been able to provide a good response for our partners, and as I said, I've mentioned in the main body of the report the work that is specific to those new and emerging fraud risks that are coming on the back of COVID, and the council and the government response to COVID with the schemes that are put in place to support the public and businesses. So, Chair, if I can just take members, you mentioned already that my bundle starts at page 345 of your bundle is a covering report for my main body of the report, which actually starts on 347. And the recommendation in the report is for you to review the council's work. And this is very much a council-wide piece. It isn't just about SAFs. It's about us working with officers. And also the SAFs KPIs as well, which I'll discuss in a little more detail in a moment. As usual, we've included with the main body of the report at section 1 on page 349 a list of recent publications, documents, reports that committee members, we do commend those documents to committee members to read. Perhaps at bedtime might help a little bit with getting to sleep, but they do give an idea of the impact of fraud on local government and on UK PLC as well, how we fit into that picture. So we do commend those documents to you. If I could just take members to the appendices. In the main body of my report, the appendices are referred to as A, B and C, but I know now they're listed as items 7B, 7C and 7D in your bundle. So 7B on page 361, members can find the anti-fraud plan for the County Council last year. So this plan was agreed with officers and reviewed by this committee in March 2019. The plan, as I've said already, is very much a partnership between council officers, SAFs and a number of third parties that we work with to protect the council against fraud, corruption, bribery and money laundering as well. So the plan details all the activity that we will be undertaking in the year. At item 7C on page 369, you see the performance in delivering the plan for last year, and I'm really pleased to report that everything we had planned for last year was delivered, with the exception, the sole exception, of my service gaining the accreditation, the counter-fraud profession accreditation, towards the end of the financial year, which we're expecting to happen in March. But we had to delay that due to COVID. Unfortunately, it's a Cabinet Office process and the majority of their staff were diverted elsewhere, which you'd expect to respond to COVID. So that's been delayed until now. We brought it into the current year's plan, and we hope by the end of this year that all staff working for SAFs will have joined the counter-fraud profession. So that's a real positive for us. But the fact that we're able to deliver that plan and with officers deliver that whole plan last year was real credit to the authority, to the council officers working for the authority. And I've covered a bit more detail in the main body of my report around the performance in delivering that plan. And then lastly, item 7D on page 371 is the SAF's performance against its agreed KPIs. And again, I'm really, really proud that we're able to achieve or exceed all of the targets that were set for the service last year. That was really, really, really proud of the work that we did for the County Council last year. And again, we did that in partnership, so we didn't do it on our own. That's not just us. That's us working with and relying on people working for the authority as well. So if I can just briefly run through the main body of the report and just highlight a few things. On page 351, we mentioned this anti-fraud culture and trying to develop and build on the anti-fraud culture that we already have for the council. We mentioned there some of the training and awareness sessions that we're providing and ensuring that the public and staff can report fraud or escalate suspicions of fraud through appropriate channels. And that's really, really important that we get that message across, that staff, if they suspect fraud, can report it, as well as the public. Page 352. We mentioned there the details of reported fraud affecting the council. So we're breaking that down by the services that are affected as well as the sources. So who's actually reporting that fraud to us? Where's that information, that intelligence coming from? And then on table 3 on page 353, we've now for the first time we're showing the comparisons year on year for fraud reporting for each of our partners. So members can see how that might fluctuate. Actually, for HCC, it appears to be a fairly steady state, that we have a certain level of report fraud alleged fraud reported to us for investigation. We don't know what that tells us really, other than people reporting fraud. That's quite good. The public and staff both have confidence in reporting matters to be investigated. So that's just there to show us a comparison year on year. And then from page 353 to 354, we talk about some of the specific anti-fraud work investigations that we've undertaken. And again, it mentions that we are working really closely with colleagues at the County Council, in particular with HR, with ACS, with Adult Care, Children's Services and Customer Services as well. In particular, we work with other teams across assurance services, so with the Shared Internal Audit Service, risk management and the insurance team as well to undertake some of our work. Chair, I've just picked up that somebody's got a question. Do you want me to take that question now?
No, keep going. We'll
Okay,
do all the report and then we'll come in with questions at the end.
Thank you very much. I'll rush through the rest. So page 355, I've mentioned there the response to COVID, and as you said already, Chair, it's unfortunate, but it's not unexpected that fraudsters would see an opportunity to exploit the schemes that have been offered by the government or by the council or by the council's response to the COVID crisis. That work is still ongoing, and again, we continue to work very closely with partners and with SIAS, looking at the assurance piece. But we're trying to do that, and I've mentioned this before, it's really, really important that we do that in a low friction way. We don't want to prevent these services or delay these services being delivered or that response being delayed in any way. So we're looking at things very closely, but we're looking to see whether we can detect something early and stop it happening. So we actually have an understanding of what we're going to do. So we put something in place to stop that happening, or that we provide some real clear assurance work, and again working with science colleagues, looking at what we've done to make sure it was the right response and we haven't been open to fraud, or if we have, that we investigate it and deal with it. On page 366, we mention again some of the proactive work that we're doing, some of the publicity campaigns, some of the use of data analytics, and we've taken a lot of what we learned last year into our plan for this year. So we are really moving towards sort of prevention and deterrence ahead of investigation by using data analytics and communication plans that are very, very clear across the council and with the public as well. Can I just one thing I want to make very, very clear to members is throughout my report, I've mentioned savings and fraud loss, and a variety of figures are scattered throughout the report. They are summarised to some extent in section 4 in the transparency code data, but just make it very clear, some of the savings that are mentioned there, they're not always realisable. Some of them are using notional or nominal figures that are recognised nationally. I don't want to go into too much detail about that, but simply because we've identified X million pounds worth of savings, it doesn't mean that the council will save £2 million from its expenditure next year. It doesn't quite work that way. So I don't want members to be misled in any way around those savings. And then page 358, members hopefully were pleased to see that as a result of an independent review conducted by BDO focused on value for money, that provided the highest level of assurance for the SAFS board that the service is providing an effective counter-fraud function for the partnership. And then, just as I mentioned already, at page at page 358 in section 4, we've got there the transparency code data that the council is required to publish. So we've included that. That sort of wraps up everything into that final section, all the activity that was undertaken, and the fraud that was identified, or fraud savings that were reported in year. And Chair, that's my report. Very happy to take questions.
Thank you. Firstly, we'll never know how many frauds are headed off because of the very existence of your team.
Yeah.
So thank you very much for that. Secondly, you glossed over a little bit page 371 of the pack, which is the very last one. I did notice that you had 156 referrals during the year, as opposed to 100 the previous year, and you achieved a greater success rate, 68%, rather than 60% the previous year. So that, to me, demonstrates what a good job you're doing, and a bigger volume and an improving performance. So thank you very much for that. Now, John Graham, you said you wanted a word. Sharon, would I be right in thinking you wanted a word as well? John first, and then Sharon, perhaps you'd let me know. Okay, John.
Yeah, Chairman, thank you. And apologies for coming in early with my question. I'd spotted the question and I thought I'd get the request in while I remembered. But so apologies, Nick, if I broke you in mid-flow.
That's fine.
My question really on resources and COVID, the link together. I mean, you say you've got 18 staff. Well, there's two questions. One is on the 18 trained staff, can you confirm you've got a full complement of those staff? And secondly, it's great to see all the work that you're doing in COVID. To what degree is there a danger that the frauds associated with COVID, as we know, they could be quite big because the press have been full of where there are opportunities for people to take advantage. To what extent might that COVID area grow to suck up the resources that you've got already?
First part of the question is yes, we're fully staffed. So we are currently fully staffed. And I've mentioned to Chair previously that we have recruited another 2 staff this year with additional funding provided by the County Council. That couldn't have come at a better time really, because those 2 people we recruited are going to be looking at use of data and data analytics and protecting children's services as well. So came at an ideal time for us. Yeah, it's quite interesting about whether we've seen a shift towards whether fraudsters have shifted their target, I suppose, to COVID. And yes, it has. Is it sucking up our resources? Yes, it is. But actually, that's the biggest threat at the moment, and that's the idea of the service that we provide, that we're able to flex and respond to that, so that where we see our partners being at risk of particular frauds, that's where we move our effort. But that doesn't mean we take our ball off the business as usual work. It's important that we maintain that as well. So at the minute we're managing it. I think the authorities have, and this is the authorities individually. Their responses to COVID and making sure they pay the right people the right money at the right time has been fantastic. The districts in particular dealing with the business grants, absolutely fantastic. The way they worked was brilliant, and the things they put in place to make sure they stopped fraud happening in the first place simply by having a robust process. It just worked really, really well. So that meant we can help them develop something to stop fraud happening, and that's the way we want to work. We want to stop it happening in the first instance.
Thanks. Sharon Taylor.
Thank you. Very good question. Very good.
Thank you very much, Chair. As you say, we have to discuss this at Resources Board, and I totally agree with your view that theft in this area, whether it's COVID related or not, or fraud in this area, is theft, and it stops those who most need the support from these schemes from getting it, because there's not an unlimited supply of funds. So we have to, I agree with you, Nick, we have to do everything we can to prevent fraud.
Yeah.
And of course, there are many new opportunities for that now. And the high profile ones we've heard about in the press are around the business continuity loans and people fraudulently setting up companies to apply for those. But there are many opportunities, and they change every day as well. So yes. We have the business grants. And can I support what you said? There was an almighty rush to get these out of the door when they first appeared from government. Yeah. I think districts in Hertfordshire rightly took a step back and put some processes in place before they issued the grants. I think we were right to do that, because it wasn't a competition to get them out the door as quickly as possible, although it was vital we got the support to business as quickly as we could. But we also needed to have some steps in place to make sure that they weren't being fraudulently applied for. So I think districts were a little cautious in the way they applied their processes. But in my view, that's absolutely right, because it's really, really hard to get this money back once it's been fraudulently given out. The latest one, which I just wanted to ask you about, was the personal payments for people that are required to self-isolate. And I do have some concerns about this, although there are a lot of caveats about who can get this and who can't. So hopefully going through the process of the checking that's needed for those will by itself install some more checks on those. But I wanted to ask whether you've been in dialogue with the districts who have to give these out. And I think, so that's the that's the latest one that's come over the horizon at us. And the reporting process, I'm pleased to see you've got a good hotline number for people to report COVID fraud. I just want to make sure we're putting that out there as much as we possibly can through Hertfordshire social media, using district social media, so people are encouraged to report this. Because as I said earlier, if people claim this who aren't entitled to it, it stops those who are entitled to it from getting what is due to them. So thank you. That's all I wanted to say, Chair.
Okay. Chair, do you want me to respond to a couple of points that Sharon raised there?
Well, you're probably going to say yes to everything because I think she's made some very good points. But if you'd like to say it succinctly, because I've noticed the time and we haven't had a break yet, but if you wanted to come in briefly.
Very, very quickly, it's yes and yes then. So yes, we are working with the districts to help them with the new schemes to support people who are required to self-isolate. They are very new schemes. They went live on Monday. I think Monday was the first time payments were made. So yes, we're working with districts. We'll continue to support them with that and any other schemes that the government requires the district or the county council to be involved in. We will support those.
Thank you very much for that. And I think if we now move to the vote on item 7, the anti-fraud report, and we're well, we have reviewed the work and we have reviewed the performance of SAFs, and we thank you very much indeed, Nick.
Thank you very much.
Vote please. Whoops. And while we're waiting for the outcome of the vote, I'm mindful that it's 12:25, but I'm inclined to carry on at the moment and not call a break. It's less than 2 hours since we started this meeting, and I suggest we keep going and see how we do, if you're all comfortable with carrying on for the moment. Nobody's said anything, so I'll keep my fingers crossed, but we do have unanimous agreement for item 7, so thank you for that.
Thanks, Chair. It's okay if I leave the meeting, Chair?
Yes, indeed, Nick. Thank you very much indeed.
Thanks very much. Thank you.
Right, so now let's move on to item 8, which is on agenda pack page 373. This is the SIAS, the Shared Internal Audit. S, what does S stand for? Service, Shared Internal Audit Service, the progress report. So I think we're over to Darren Williams for this. Darren.
Thank you, Chair. So just to introduce myself, I'm the head of the Shared Internal Audit Service, and I basically act as the client audit manager for the Hertfordshire County Council internal audit plan. The report's quite big, and I'll just run through it in terms of some highlights. So starting on page 379. Paragraph 1.2, it's just to bring to the committee's attention that obviously as a separate agenda item, we've got a revised audit plan being tabled to take account of obviously the changing risk environment following COVID. But this progress report is actually based on the revised plan. It was obviously easier to report on that basis. On page 380, paragraph 2.2 and 2.3 and 4, we just provide a summary of the completed projects included within this report, as well as those reports in draft, and the status of the 1920 remaining audits, both of which are now at quality review stage, and the draft reports will shortly be issued. So that will complete the 1920 outstanding audits. On page 382, paragraph 2.5, we just give an update on schools activity. 3 themes. The school website's theme has now been completed. It's probably just to highlight to the committee that subsequent to publishing this report, the SFVS theme that had been programmed for the autumn term has now been deferred to the spring term, just basically to ease the pressures on schools. Obviously that does backload the work we've got to do, but we're still confident that we'll be able to complete the schools plan. On page 383, paragraph 211, we just touch on the review of the 2021 audit plan, but I won't dwell on that because obviously it's a separate agenda item. Then on page 384, paragraph 2.14. We just provide details of any limited assurance audits. There is one within this report, and that's the Hearts Music Service and their safe recruitment systems. In reality, the limited assurance opinion was given around 3 specific areas that required improvement. One of those was around pre-employment checks relating specifically to DBS risk assessments or documenting these for any employees that start before a DBS result is received. But it's worth highlighting that is only in exceptional circumstances that would be used. Also in relation to references and making sure that we always obtain a reference from the last role where the applicant has worked with children, especially if that's not their last employer, and training for individuals undertaking recruitment activities where neither of the 2 individuals had actually received training at the time of the audit. That's not to say they didn't have experience though. On page 384, paragraph 2.17, we just reflect on any high priority recommendations that have been raised since the last report to the committee. So obviously, touching on Hearts Music Service again, there were 3 high priority recommendations raised, and there's also a further recommendation for Hearts Business Services, which related to creating a new business plan as the existing one had expired. On page 384, paragraph 2.18, this is where we report on the high priority recommendations follow-ups. So we followed up 8 in this period. 3 have been implemented, 2 partially implemented with revised dates, and 3 are on track with previously amended dates. I did think it was useful just to give the committee an update on those that are overdue, just to give a bit more context, because obviously we are in a challenging environment at the moment. And this relates to Appendix B of the report, page 395. So we've got 3 that are overdue at the moment. One is the Hearts Home Improvement Agency, and that's 6 months overdue. I think it's worth making the committee aware that the original report had 18 recommendations in it, and a large majority of those are now implemented, as the committee will have seen in the recent follow-up audit report that they received. Strictly speaking, the original recommendation we've made was actually implemented, but management did extend the action to look at the viability of the revenue model after the completion of those actions. I think given COVID-19, it's probably not really unexpected that a greater amount of time will be required to actually come up with an accurate kind of view of the future revenue model. So we are satisfied that revised date appears appropriate. And it is also worth highlighting that in the meantime, the HHIA does report to a board, which comprises of the relevant representatives from HCC and the districts that are part of the partnership. So they do oversee the financial performance and strategy for that service. The second one was care payments and commitment systems. That's 5 months overdue, relating to the automated processing of invoices. That has primarily been delayed as it needs resources from providers, and obviously at the moment the focus of providers needs to be on providing a frontline service. So obviously the date needed to be pushed back on that one. And the last one was Hertfordshire Music Service safe recruitment, and in effect all of those recommendations have been implemented for the purpose of any future recruitment activities. The bit that's outstanding is going back through some of the previous recruitments, specifically around references, just to check that we did actually include the last employer where the individual worked with children, if that wasn't their most recent employer. Then on page 385 of the report, paragraph 2.23, we provide the update on medium priority recommendations. 59 were followed up in this period. 18 were implemented, 26 were partially implemented, and 7 were on track with previously revised dates. We have highlighted in the report that we were unable to receive updates from 8 in relation to 8, but I can confirm to the committee that we've now managed to secure all of those. And in relation to those 8, 1 has been implemented and 7 have revised implementation dates. Following the process that we've just gone through for the high priority recommendations, I thought again, because we've got quite a few going over 12 months old now, it might be useful just to make the committee aware of the progress of those. So this basically relates to Appendix C. I think that's around page 405, maybe slightly before. So the ones that are outstanding, we have one on the LEP, which is 16 months overdue. That related to just adjusting the end of project assessment template. That's been delayed due to the LEP obviously focusing on their COVID-19 response. We also had one on care and support plans, direct payments. There were 3 recommendations on that one that are outstanding. They're in between 12 and 19 months overdue. We're satisfied that those are in progress in terms of the work required to fully implement those. And the key element of that is the DP strategy or direct payment strategy that's due to be presented to the November ACS Management Board. In terms of the 0 to 25 integrated service, that's 19 months overdue. It's worth highlighting to the committee that, to be honest, the bulk of that recommendation has been implemented. It's really just extending the management information in terms of an additional reporting suite. But management are satisfied that compensating arrangements are in place through other reporting mechanisms until that is completed. Section 106, that's 14 months overdue. That obviously was slightly delayed due to the delays in implementing the DEF system, which the committee will probably be aware of through previous progress reports. That's really a recommendation around building additional reporting suites. And again, management do have kind of alternative processes in place until that is completed. And the last one was fly tipping, which is 15 months overdue. That is actually completed, subject to one final district sign up to the revised process. But again, it relates to a protocol for the removal of fly tipping on the highway. But in the absence of that being totally formalised, there are arrangements in place to deal with such instances. This is just more about making it more efficient. So I think my summary on the medium recommendations is actually the risks related to the above not actually being implemented in line with the timescales is probably quite low because most are really just relating to additional systems efficiency or improved audit trails. Finally, on page 387, paragraph 2.26, that's just a summary of the performance of the service. In terms of planned days, we had a profile of 39% delivery. We've reported 38%, that's now increased to 41%. And in terms of planned projects, 38% profile. We've reported 33% delivery, that's now increased to 35%. And finally, client satisfaction, that's 100% at the moment, based on the results of 3 of the 11 questionnaires issued during 2021. And that's my summary of the update report, and invite any questions.
Thanks very much indeed, Darren. It was good to note, wasn't it, in the governance statement back in agenda item, I think it was the back of item 3, that the authority that this audit committee has to call before them the directors of the service areas where deadlines are being seriously missed. I think that was a very helpful reinforcement. So I hope your audit team feels that we continue to support you. So thank you for all that you do. I welcome very much your comments on the table on page 386. I did have a conversation with officers about whether or not we should call in this time one of the senior officers to advise on the situation, and so many of those relate to adult care services. But to be honest, the update you have given me, showing me that you're on top of each one, and most of them, they're almost complete. There's just 1 or 2 issues outstanding, and adult care services have done an incredible job and have been recognised for it in the last few days. An incredible job in what they're doing. They don't need us to start calling them into committee at the moment, particularly given the updates you've given. So thank you, Darren. And Paul Zukowski, I see that you'd like to ask a question. Paul.
I do, but actually, I think your comments just there raise yet another question, Francis. And the question that I would have was, when was the last time a service director was called in by the audit committee? Because I've only been on this committee a couple of months, but I was previously on it for 12, 18 months, and I don't recall that happening during my tenure on this committee at all. So I'd be interested to know when the last time that was actually put in place. Because I think it's something that perhaps we should be using. The question that I actually had...
It was massive, and we had 4 people coming in, and the entire service area of the Hertfordshire County Council got the message, and the number of deadlines that were suddenly met was quite remarkable. I'm sorry it was in the period that you weren't with us, Paul. Sorry, back to your question.
That's fine. Okay. The question that I actually wanted to ask was actually on the statement in 219. And it might be just my lack of understanding of where things directed towards, but it suggests that high priority recommendations coming out of SIAS that relate to schools are excluded from the listing, given that because of the volume of schools within the county and the relative risk of any single recommendation. And I get that, a single recommendation to a particular school is going to be particular to that school, and its risk in terms of the overall authority is going to be very low. But I think there is a question that comes out of that as to where those are actually reported and how they're managed and how they're dealt with. So if you could just fill me in, I mean, it might be that other people already know this, but if you could just fill me in, I'd appreciate it.
No problem. Totally in line with what you said there, that actually the risk related to any one recommendation is low to the council as a whole. But what we do you'll probably see it in the next item on the audit plan. We have an allocation of time under the schools programme to do a follow-up of basically high priority recommendations, and any schools that receive limited assurance, we follow up all the recommendations. So we don't actually report that to the committee at the moment, but we can obviously in future just give a briefing of the outcomes of that exercise. It's basically done once a year in the autumn term. And as I say, we follow up all kind of ones that fall into that category since the last time we did it. Also, I think the committee also receives the annual report. Whilst that won't give you the indication of what schools have done with the recommendations, it will give you the opinions for each individual school visited and the number of recommendations that were made. So you also get visibility on individual schools through that.
Okay. So I was just wondering whether there is a body that would be considered a democratic body that this is actually reported to. So if a school basically said, well, you've come in and audited us, but we're not really going to do anything about it, would that information be passed up to, say, the education committee, which I think would be interested in the response of a school in that way? So I'm just wondering what the procedure process raising would be, because we've just said, Francis has just responded that, we pulled directors in as audit committee within services in the county, the actual authority itself. What would be the procedure with a school that was failing to deliver on recommendations in the time frame?
Sure. So basically, it doesn't go to any particular committees or panels at the moment. It is all done directly with Children's Services and the Operations Director, Education, Simon Newland, and will also obviously be reported in extreme circumstances to Children's Services Board. But we do work very closely with them, and we haven't had any issues to date with schools not actually accepting audit recommendations. But it's certainly something we can look at going forward in terms of the level of information that perhaps the committee would like in relation to schools.
Yeah, I just think it's an interesting question and something that, perhaps officers should take a view on going forward as to what the line sequence of that should be.
I think it's a very interesting question. It's also an interesting question whether the Cabinet Member for Education is informed on this. So perhaps, Darren, you could have a look into that and we can pick that up. OK, so if we look then, I've got no other questions coming forward. Item 8, the progress report. The recommendations are that we note it and we note the progress. Are you all, can we vote on that? Are we all happy? And meanwhile, I'm moving on to page 409, which I think you're probably all scrolling up to, for item 9, the revised internal audit plan report, which follows on from here. But we'll just wait for the outcome of the vote first. Thank you. That's agreed. So let us now look at page 409, agenda item 9, the revised internal audit plan report. And I don't think anyone here will have been surprised to see that the plan had to be amended to take account of COVID. Darren, over to you again.
Okay, thank you, Chair. I'll just give the committee, obviously, the various kind of elements in terms of the approach to updating the plan. So probably just starting as a bit of background on page 415, paragraph 1.2. To be honest with you, I won't dwell on this because the Chair's obviously given the background on this, but we did present the original plan, or attempt to present the original plan to the March committee, which obviously couldn't sit. So instead, the original plan was approved for officer delegation. That was based on a horizon scanning undertaken with service boards in December and January 2019-20. Obviously, in line with professional practice and given the changing risk environment, we obviously decided we needed to relook at the audit plan. And obviously that's provided as Appendix A to the report. But to take you through the process, on page 416, paragraph 2.1, we highlight to the committee that obviously there was a significant period of disruption during April to June where it was not feasible to undertake the original audits in the plan. And obviously, as a result, we lost a fair bit of capacity. Obviously, we did use members of staff during that time to support partners to SIAS and obviously HCC as well in terms of other activities. So that meant that the total allocation of days we had available was reduced by about 127 days. We've also had a further kind of reduction to the available days in relation to 2 members of staff that we basically redeployed to support Operation Shield, very much around assisting the kind of governance of the project. And they worked full time on that project from the period April to June 2020. So I think it was a very good use of those resources. On page 417, paragraph 4.6, we just reflect on the fact that we've followed the standard methodology when we've been reviewing the audit plan, focusing on the council's key risks, obligations, using a risk assessed methodology, backed up with appropriate horizon scanning and consultation with key stakeholders, and obviously retaining inbuilt flexibility in terms of the revised plan to allow us to be able to pick up investigations, advice and support. On page 417, paragraph 2.7, this is where we just build in where we've looked specifically at COVID-19. So in April 2020, we put a proposal to SMB about basically having a COVID-19 themed based assurance programme to be delivered in Q2. The intention was to provide assurance over the robustness of governance and record keeping arrangements for key response activities, such as, for example, Operation Shield or facilities, health and safety, as well as how the council has been maintaining key governance and operational processes. The proposal was approved by SMB on the 11th of May, and we subsequently worked with service boards to put the programme together that you will see in the revised audit plan. On page 418, paragraph 2.10, we just talk about reviewing the previously included audits in the original plan. So we work with service boards to review their slices of the original audit plan, including a review of the significance and importance of the previously agreed topic, any additional emerging risks related to COVID-19, and as well the ability to actually undertake audits, given that obviously some transformation projects will have been deferred or slightly paused. So things we may have had in are no longer appropriate to be able to do. Following the above, we then took all the areas and assessed it as for the council as a whole, and risk assessed basically what we felt was appropriate to go in the plan based on the number of days we had available. On page 419, paragraph 2.12, Just put a little bit in there around the methods of delivering audits. I won't dwell on that, but it just gives the committee a bit more information on the different types of approach we're going to use, and that influences which reports the committee will see. One of our primary focuses is to try and be agile in the way that we're undertaking our work, so that outcomes can be reported quickly. On page 419, paragraph 2.13, we just kind of provided a table that just showed the differences between the original audit plan that was approved in April and the revised plan in terms of coverage by service. I have to say that on reflection, that table probably doesn't really show a clear enough picture, because obviously, whilst we may have individual services that have quite a drop in the percentage of the revised plan, obviously they are covered through alternative kind of things in the plan, such as the COVID-19 insurance theme and council-wide reviews as well. So it may give a slightly misleading picture as to the level of coverage for any individual service. We then obviously have appendices to the report. Appendix A, which is the revised 2021 audit plan. Appendix B, that provides the committee with information on the audits that were removed from the original 2021 plan and the reasons why they were removed. Appendix C gives the reserve list audits. Those are basically topics that fell slightly below the risk assessed level for inclusion, but could be introduced into the plan if other audits drop out. And Appendix D includes the areas carried forward for consideration in our horizon scanning with service boards for 21-22. On page 421, paragraph 2.17, it's just bringing to the committee's attention that obviously one of the things that we need to bear in mind when we're revising the audit plan is the fact that we give an annual audit opinion, which obviously is reflected in the AGS, and obviously is a separate report to the committee. So obviously we need to make sure that the work is broad enough to give an opinion on the adequacy of the council's governance, risk management, internal control arrangements. We're satisfied that the plan we've presented to you would be sufficient to do that. However, obviously the committee obviously need to bear in mind that that is subject to us being able to actually perform all of that work, and obviously we're really kind of reliant, I suppose, on the environment staying stable for the rest of the year. If there's significant disruption, it doesn't mean we can't give an opinion, but it will be reduced on a reduced evidence base. Page 421, paragraph 3.3, just highlights performance indicators for the year. Those are unrevised from previous years, but obviously will be measured against the revised audit plan as opposed to the original. And finally, page 423 is where I believe Appendix A starts, which is the revised audit plan. So that's really my summary.
Thank you very much, Darren. And I would imagine you've had to work extremely hard to pull together a new plan, given the pressures that everyone is under. I haven't seen any signing for people wishing to question, so my instinct is to thank you very much indeed and to go straight to the vote, please. And then we can all scroll down while we're waiting for the outcome of that to page 447, which is the beginning of item 10, the risk management update report. And Elaine, thank you. I've just heard that that was unanimously agreed. So if we now turn to page 447, the risk management update report, there's quite a lot of change in here again, because of course last time we were not able, I'm not sure who's apologising to leave the meeting, but goodbye. Oh, John, goodbye. Right, we've got in the July Audit Committee, the report was pretty much deferred because so many of our staff were redeployed on other issues. So, Fiona, I'm quite sure we've all read carefully through this. Perhaps you'd like to just give us a little bit of background on the particular changes, because there have been some changes, and I'm looking at page 451. Well, I'm looking at the risk registers.
Okay, that's fine. If I just, I will scoot through as quickly as possible. Obviously, as you've explained, this is the first full update report we've been able to do since we recommenced the strategic risk management activity following lockdown. The key features I'm going to focus on are in, first of all, table 1.8 on page 449 of the pack, which just highlights that we've got that one additional red risk. And I'm sure members probably won't be surprised to learn that that is around COVID-19, the possibility of a second spike, an economic downturn, and the impact on recovery and our ability to deliver our key services as a result of all of those things. It's shown as risk SR33 on the heat map, which is on page 450. And obviously, as well as risk, members do get regular COVID bulletins on COVID and what the authority is doing in response. Keeping on to that heat map on that page, you'll see that the risk SR28, which is about the use of the council's assets to deliver large-scale developments, has actually reduced in its likelihood from possible to unlikely. The impact, though, does remain very high, and it's consequently still a red risk. That was the risk that was agreed to be the subject of the risk focus report, which was going to be held at the Council's March 2020 meeting of the committee. Turning now to the corporate risks, the heat map on page 452, I believe, shows the changes in the assessment to 4 risks. The first one being AC12, which was the possibility of care home provider failure. That's got an increased likelihood assessment from unlikely to possible. And again, that was a subject of a risk focus report actually back in November 2018. And then keeping it in with risks related to adult care, AC11 is the risk about uncertainty of funding, and that similarly has increased in its assessment, but this time from possible to likely. And then we have 2 more changes to risk, which is risk CPO2, which relates to the risk of radicalisation and prevent, and that has actually got a reduced likelihood now and is now at its target score. Members may remember that there was quite a bit of influence from the audit committee in terms of trying to get everybody trained in terms of prevent. Risk R25 is the risk of non-compliance with county properties in terms of its health and safety compliance. That is again been reduced and is now at its target score, and you had a risk focus report on that in July 2019. The details of all the change risks have been provided in Appendix A, and that does include the various controls and mitigating actions that are either proposed or actually in place to try and mitigate these risks downwards. I think overall, I need members to discuss which risks they'd like to consider in more detail as a risk focus report in the next meeting in December. And I just wanted to highlight that because there's quite a short time period between this meeting and the next meeting in December, we're probably going to have a little slightly different format to our report, and we will just concentrate on the major risks that have changed within that period and any risks that are proximate to that sort of time frame. So, for example, EU transition, because we will be approaching that more rapidly at the beginning of December. So those are what I wanted to cover. Highlights from my report, and I'm obviously welcome to take any questions or observations from members, and again to agree the risk focus report. Thank you.
Fiona, thank you very much indeed. There are so many risks in here that we could look at for the risk focus report, given that the incredible changes which we have come through so far, which we are going through at the moment, and who knows who is ahead. I have to say the new strategic risk, I'm on page 451, SR33, with threats from, for example, further spikes, there is a risk that the planned recovery from COVID-19 is not as agile or resourced enough to maintain key service delivery. I have that very much in the forefront of my mind, and I also very much have the fact that asking any other service areas at the moment to prepare a risk-focused report for us, given that I very much hope finance are doing this all the time, and I'm quite sure that they are doing it all the time. We don't want to overload a service department at the moment. My suggestion is that we go for the new strategic risk, because managing the COVID situation on behalf of residents of Hertfordshire, to me, it's a duty that we have, and as Audit Committee, I think we probably should be overseeing that. So that's where I'm coming from. Now, Paul Zhakowski, you've said you'd like a word.
Indeed, and I will start by responding to yourself, Francis, about that particular risk. I think that, in fact, dealing with that risk and managing that risk is the responsibility of the Resources Committee, and it has been doing its job to do exactly that. So I disagree that that's the risk we should be looking at, because what we're doing there is, one, replicating what the Resources Committee are already doing, and two, asking people who are central to delivering that agility to put time aside to put yet another report together for another separate committee within the council, and spend time doing that rather than making sure the council is as agile as possible. So I would disagree quite strongly with you on that particular point. I actually wanted to suggest a particular risk in here that is not specifically badged as COVID, but has, I think, profound impacts for the council in the COVID context. And that is actually the risk. Let me just try and find it in my documents. It's the risk associated with HLL and Chalkdean, and the return on land and assets limit success, which is listed as SR21 on page 452. It's listed with a risk score of 24. The target score is 16. But the way that the risk is framed says risk that barriers to HLL and Chalkdean JV partner arrangements to maximise return is quite interesting, in that you could take that one of the barriers is the uncertainty and lack of stability in land values and development in a COVID scenario. And actually, I would challenge whether we've done a recent review of the risk around that. It feels to me a difficult one to actually review, but I think given its importance to the council going forward, in terms of funding our capital programme, funding lots of transport things and so on, that it is actually one that the council should actually be taking and paying some attention to in the very near future. So I would suggest that, you know, looking at the barriers to development processes, particularly things like land value, the economic viability of developments, the availability of you know, workers to actually construct those properties, in the scenario that we find ourselves in a post, you know, during COVID world, I think is really quite critical to what's going forward in the economics of the county council. So I'd just like to suggest that as an alternative.
That's really interesting, and you set me thinking there, Paul, so thank you for that. I'm going back to what the Audit Committee is supposed to be doing, and we are trying to satisfy ourselves that the governance of the county council is correct. We're not doing the job ourselves. You're quite right, Resources is handling finance, and it's also handling property, and I'm quite sure it's working very hard on all of them. So I think I'm looking at the score, and for me, if our officers assess a new risk at a score of 48, and I know that we should be linking the work that we do with the level of risk that the officers are looking at. If the officers are looking at a new risk with a score of 48 with a target score of 32. In my mind, comparing that with an officer score of 24 with a target score of 16, my instinct is to say I think it might be helpful if we went for the big one this time, which is the new one with a score of 48. But I understand exactly what you're saying. Now, I welcome other comments, and I see Sharon, you'd like to have a word. Sharon.
Yeah, I think that the thing we're wrestling with is both of these are important, and I've got a lot of sympathy with what Paul's saying, because I don't think we've done enough work on the risk of delivering against the programmes that are in that risk. I just wondered whether the risk at SR28 is lack of finance and delays to infrastructure delivery due to the success of major developments using county council assets, might enable us to have a look at what the impact of the delivery of those new assets is on the finance of the council, which I think is where the audit committee would most concern itself. We want to try and look over this from a governance perspective and make sure that if the resources committee, which I believe it is, and I agree with Paul on that, is really covering off this new risk at SR33, I wonder if we could do something on SR28 and have a look at both things together, about whether it's the financial impact of getting it wrong on the management of the county council's assets that would be of great concern to me going forward.
Can I just ask an officer to give us a little bit more background on SR28? There's one specific site. I look at this and I think of one specific site. Could we have advice on that one, please?
I can just try to help out on that. Overall, it's the main key sites that the council has earmarked where its assets will be going forward for development. They are the Brookfield area and also the substantial development planned at Baldock. There are obviously various things that can come into play to influence those. We've also got the planning white paper coming forward that's going to potentially amend what can be done there. North Herts local plan has yet to go through. There's a lots of variables that could impact on that. I think we were hoping to get some external funding towards the Baldock development, but we're now going out to see if that can be available privately. So there's a number of things there that come into play that you could consider. And as we've said, there are a number of things there, factors from COVID and potentially the EU transition that may affect both the availability of materials and labour to develop big schemes like that.
And again, I'm back to the officer assessment of the level of risk, and I see that SR28 has been reduced and is now at its target score. It's come down to 32, excuse me a moment, and the target score is 32. I recognise everything you've said. I recognise the incredible importance of the property situation in terms of our ability to go forward. I still feel quite strongly that we have a duty at the moment in terms of governance to look at the new high risk one at 48. So I think I would still like to go with 48. So I think probably do we go for a vote? I haven't heard any colleagues from the Conservative side. I've heard Paul, I've heard Sharon. This shouldn't be a political issue at all. A lot of people have been very quiet.
Chairman, my sense with the risk is that as executive members, the officers have a chance to identify where they think the risk is. Whereas I think that it is our role of the audit committee to discuss it and challenge it. But fundamentally, I think the risk is that the identification of risk is an executive tool. So I'm very happy to go along with you that I think if the officers have identified a risk to be 48, particularly as it's a new risk. I think we ought to have a look at what that risk is all about. So I would be supportive of us looking deeper into that the 48 rather than the others that as the officers feel are not as high profile.
So I'm going to propose that, and John is seconding that, and I proposed that to start with, didn't I? Officers, sort out how we handle this one, please. I've made a proposal and it's been seconded.
Francis, can I just ask how we're going to avoid duplication with what the resources panel is doing in that case?
I think there is a difference between our duty to look at the governance side. I'm completely mindful of what you're saying, Sharon. It's just the fact that the officers have put it in at a risk of 48, and resources will be doing the work in order to try and cover the financial situation. Officers are saying that there's a risk. We need to assess the risk and check that in governance terms it's been properly done. Comments from officers, please? Sorry, I've made a recommendation and it's been seconded. A comment from Paul.
Yeah, I think I'd reiterate what Sharon says, that you know, the fact that a risk has been identified is quite clear if you look at the minutes and the detail that went to the last resources panel. It is very clear that there is significant attention on that and significant scrutiny by that panel on that particular risk. I think looking at it again in this context is probably not a good use of our time and our officers' energies. So I would not be happy with putting that as the risk, because what we should be doing is directing it towards areas where we think there is a potential governance issue. Well, actually, the governance on it is, I think, relatively clear, relatively open. It is being managed within the remit of resources. And I think we should let officers get on with that, with the oversight that the Resources Committee and the Cabinet provide to that.
Then I suppose my comeback is that all of these issues, property, adult social care, children's services, schools, all of these issues are being managed by officers. So anything we do, we are looking at, we are overseeing, we are evaluating and ensuring that the governance of that area is correct. So yes, that's right. I've made a recommendation and John has seconded that. So officer, I'm assuming that we go ahead and vote on that. Elaine, I'm asking you a question. Is it technically correct that we go ahead and vote on the proposal that I've made and that has been seconded? And if so, then shall we vote?
Yeah, as Tim has just suggested, Francis, we can vote on the individual recommendations within the actual report.
Oh yes,
vote on them individually, if that would be helpful.
Shall we vote? Shall we take 1 and 2 separate? Sorry, we'll take 1 and 2 together. Can we vote on those?
Yep, and then do the other one separately.
Yes, so this is a vote on 10, little 1 and little 2. And little 1 is that the changes be noted, and little 2 that the risk management update report be noted. So we're voting on those 2 together at the moment.
Right. I agree to that. We've got to do it. Make a final comment.
Okay, so that's the majority agreed on that. And then for little 3, there's a proposer and a seconder that it's the new risk evaluated by officers at a level of 48. So if we now agree on SR 33 being the risk to be reviewed as part of the risk focus report next time. Thank you. The majority's agreed, and I am faintly uncomfortable about this. I'm grateful to the whole committee. I do think the property issues are huge. Quite how we attempt to differentiate between the level of risk and ensuring the governance of all of it is correct is really difficult. So I think it's the officer recommendation and the level of risk on this one which has led to the proposal, but I am uncomfortable about it because it's always terribly nice if the whole committee agrees together.
Chairman,
yes,
if I could just comment.
Who is that? Oh, John. John.
Sorry, your vice chairman, just commenting on your uncomfortableness. I do notice that the risk is owned by Owen Mapley, and he will be obviously he's in charge of everything. So I'm sure if there is an issue as raised by the other members of this committee, that will surface in the discussions. So I think you can be relaxed that there is a senior executive sitting on top of both the issues we've discussed this morning.
Thank you for that comment, John. So if we then move on to item 11, which is the future work programme, have I just spotted another comment?
Yes, please, Councillor Button.
Well, the item 10 is now closed, I think, and we've moved on to 11. John,
well, I just wanted to comment on what Councillor Graham just said.
Oh, go ahead.
And that was just to say that I think it would be very unfair on this committee to ask Owen Mapley about items that are not directly related to the risk that we are discussing, because otherwise that is expecting him to come prepared to this committee to cover all items. So I disagree with the comment Councillor Graham said, though I know Owen will do his best to answer anything at any time. I think that is an unfair expectation.
I think I suggest we move on. Okay, so let us move on. Item 11, future work programme, and this is set out on agenda pack page 3, right at the beginning. And if anybody can't scroll back that quickly, and it covers the usual reports that we would expect and the new risk focus report we put in there. So are you all happy with that? And it covers Treasury Management, the Statement of Assurance, SAF's Progress Report, Audit Plan Progress Report, Risk Management Update and Risk Focus Report. I think that's probably okay. Thank you very much indeed. That's the end of the agenda. Thank you all very much indeed. Thank you as well for pursuing through the whole lot without a break. I know one or two of us. You can turn off the speaker and the camera and sneak out. It's actually the officers I particularly want to thank, because they're probably the people who can't do that in case they miss something. So thank you all very, very much indeed, and for your patience. So goodbye, everybody.
Thank you, Chair.
Bye bye now.